Thank you for attending the inaugural 6 Virtual Spring Conference. By way of an introduction, my name is Daniel Barronkin, and I am the CEO and founder of 6. Our mission at 6 is to unlock social mobility on a global scale by empowering anyone from anywhere to invest in anything. As someone, somewhere, investing their time, energy, and spirit into something, our mission, in a deep sense, is about you. Our products and services democratize access to financial information so that more people can participate in how the world around them gets built. At our core, 6 is a place for capital and ideas to meet, and that means meeting without a middleman, without an intermediary. That also means that we do not provide any investment advice whatsoever of any kind. You must conduct your own research. You must do your own due diligence. You can achieve some of this by attending the presentations of the companies you find most interesting. You can participate in the live panels where you can submit questions and get answers in real time. And if you still want more, you can book a meeting directly with the CEO, IR rep, or speaker of your choice. The people and companies in attendance at this conference are more important to the future of our world than ever before. From gold and silver to crucial battery metals like lithium, palladium, and nickel, the strategic value of these companies as they explore, develop, and produce resources is significant. It is worth putting in the effort to learn because the reward for being right is much greater than the penalty for being wrong. Thank you, and I hope you enjoy the conference.
Ladies and gentlemen, welcome. Note that this is pre-recorded, but I'm delighted to be able to address this gathering of junior resource investors and speculators. Delighted to be with you all. Thank you both for the conference sponsors and also, of course, to the people who organized this conference for attempting to give people more education and make them better investors and speculators. I've been asked to talk about natural resource investing, particularly in the context of juniors, so I'm going to do that. Given the circumstance that we find ourselves in today, I'm going to begin with a bit of a backdrop on global macro, including, of course, political. Let's begin by saying that the resource world, and in fact the rest of the world, has been turned upside down, obviously by the events in Russia and Ukraine and by the international community's reaction to that. The apparent weakness in supply chains around the world has really been called into question by the conflicts that we see in Russia and the lack of ability of either the Russia or the Ukraine to transact with the rest of the world. First of all, because of war, but second of all, because of the sanctions, including Swiss sanctions. And that has pointed up some very real difficulties in the global supply chain, which is to say there isn't very much slack in terms of natural resource commodities, irrespective of the country of origin. But in particular, Russia is a very important exporter of both oil and gas, ironically, much of that through the Ukraine, a reasonable sized supplier of things like uranium, wheat, potash, coal, importantly, platinum and palladium, nickel, potash. And so the consequences of that to the global economy and also, of course, to resource industries are major, but we don't know how they're going to play out. All I can say is it's going to be a very interesting rodeo ride. So, make considered bets, don't make rash bets. Be prepared to change your mind in terms of global macro in a real hurry. And enjoy what is at once tragic and interesting circumstance. The backdrop beyond that is largely bullish. I have said before to this audience in other circumstances that I believe that we are or will experience 2 bull markets in our sector simultaneously. One bull market, which I suspect is about a third of the way underway, is a precious metals bull market. In my experience, precious metals move not so much as a consequence of geopolitical problems, although the current conflagration has certainly put wheels on the precious metals prices. But more importantly, when savers and investors are nervous about the purchasing power of their savings and investment assets in products like bonds denominated in fiat currencies, products where the declining purchasing power of currencies impacts the savings, the ability of savers to maintain purchasing power through conventional instruments. And of course, we're experiencing that circumstance, negative real interest rates and high base rates of inflation worldwide, which is good for precious metals and I suspect will be better in the years to come. Secondly, as a consequence of what I would suggest is 3 decades of underinvestment in productive capacity in other natural resources, which is to say things like oil, potash, phosphate, copper, the world faces a circumstance where almost certainly there will continue to be commodity shortages and therefore higher prices for a fairly long period of time. The only way that that wouldn't come to pass is if the world suffered a sort of a synchronized global recession or depression. It's above my pay grade to tell you if that circumstance were going to occur, and if so, when it might occur. So the general bullishness around raw materials must be tempered for those of you who believe that the current economic circumstance that we enjoy on a global basis is challenged by the specter of recession or depression. Absent demand declines as a consequence of a global economic slowdown, I think that the 4, 5, 6 year outlook for a broad range of materials is, very good. And I think that the systemic shortages that we face as a species have been highlighted by the impact on commodities prices, given the very short-term duration that we have thus far experienced in the context of the conflict between Russia and Ukraine, and perhaps Russia in the rest of the world. So that's going to be the backdrop that I talk about the rest of the market about. Note that because this audience is primarily concerned, I think, with small and micro cap stocks, the so-called juniors, I'm not going to talk about the large cap or mid cap resource stocks, although I enjoy talking about them. I'm going to confine my remarks to the juniors. And I'm going to start by making you very, very, very sick before, like a good speaker, I make you well. It's important to note that the junior resource sector as a whole is valueless. It's absolutely valueless. It's a mechanism for destroying capital, or at least reorienting the capital from shareholders to managers and inside investors. In fact, if you were to merge every public exploration company in the world into one company, Junior Explorco, that company would lose $2 billion in a good year and $5 billion in a bad year, meaning that the balance between value created either through production profits or more commonly through sales to larger companies would be overwhelmed by exploration expense and in particular general and administrative expense. So if you're thinking about investing in the juniors as a sector, forget about it. It is a horrible, horrible, horrible sector. It has destroyed capital for my entire investing career, which is to say, going back almost 50 years. Did I do a good job making you sick? So let's begin to make you well. The way the sector works is that probably 5% of the issuers worldwide generate such spectacular performance that they add legitimacy and occasionally even luster to a sector that in a good year loses $2 billion. Performance isn't equitably distributed across the sector. Performance is concentrated in 5% of the issuers. So if you're going to be in the juniors, stock selection is absolutely critical. It helps too to be willing to be in parts of the junior sector that other people are either bored of or hate. In other words, in resources generally, but in the juniors in particular. If you are an investor rather than a trader, at least, you will either be a contrarian or you are going to be a victim. Look at the recent experience in the uranium market. If you had wanted to be in the uranium market 3 years ago, as I was mercifully, nobody cared about the sector. The market capitalizations were cheap. Private placements occurred with full warrants, but nobody cared. or rather a few of us cared. Fast forward to 8 months ago, the stocks were up 300 or 400%. Everybody wanted to be in them. The value that was offered up by these stocks was lousy. Predictably, they fell in price by 50, 60, sometimes 70%. It has been said often that the cure for low prices is low prices, and we saw that in the uranium sector. The prices came back down, and now the sector is, I think, set to run again. This isn't me touting uranium necessarily, simply to tell you that you will either be a contrarian or you are going to be a victim. But let's take it beyond that. Many people make a mistake in looking at junior mining companies and suggesting that they're asset-intensive businesses. When I was in university, I was taught that 1 in 3,000 mineralized anomalies became a mine, which meant that the average House Street or Bay Street bargain goes like this. You have a 1 in 3,000 chance to make a 10-to-1 return. That makes the BC lottery look like a good deal. People need to look at junior resource companies as being knowledge businesses, research and development businesses, like a software company experimenting with an algorithm, or a biotech company experimenting with a molecule. What a junior resource company is that adds value is actually some intellectual capital from some very good earth scientists wrapped around a thesis, wrapped around some piece of ground. The process of using the intellectual capital to unlock the physical value is really what junior resource investing is all about. And that leads me to say that the most important asset of a junior company isn't necessarily the first project that the company takes on, but rather the people who take on the project. If you look at a circumstance where there are 1,500 to 2,000 junior resource companies in the world, and 1 in 3,000 mineralized anomalies becomes a mine, you understand something about the very stiff odds that face the sector. Yet, you have individual teams, individual entrepreneurs, individual groups. I'm thinking of folks like Bob Quartermain, Ross Beatty, Robert Friedland, the Lundin family, who have been serially successful. It's important then that rather than concentrate your efforts on the length and breadth of the sector, or worse yet, trying to find a stock that you think will go up because it only sells for 2 cents or 3 cents, find yourself companies that have serially successful people involved in them. And serially successful, meaning successful at the task at hand. It's important that in addition to the people having been successful, that they have been successful at a function which fairly closely resembles the function that they have chosen for themselves in this endeavor. And not just the CEO. Who are the control shareholders? What do they know how to do? Who are the technical people? What is their experience? If their experience is an operational experience, but they're now trying to raise money for exploration, is that experience, is that success relevant to the task at hand? If the answer is no, don't buy the stock. The second thing I want to talk about is scale. The truth is, if you're going to take the risk inherent in junior exploration, the reward has to be large. Many, many, many times in my career, people have come to me saying that their business plan was to make a small, high-grade deposit and use the free cash flow from that deposit to make a bigger company, ultimately ending up with BHP on a shoestring. Very seductive to entrepreneurs. The problem is, it's statistically impossible. If you are taking large risks, you have to take risks on a project size that can yield large rewards. My minimum target size is sort of $10 billion in situ reserves and resources. It doesn't mean necessarily that the exploration program will get you there, but the idea that you would set out to discover a small mine is not one which is particularly enticing to me, given A, the level of risks that you run, and B, the fact that most small companies can't afford in one home exploration expertise, construction and development expertise, and operational expertise, which is to say, the worst thing that can possibly happen to a small exploration company is that they find a small mine, and the talents that they have as mine finders begin to be diverted to mine builders or mine operators, skill sets which they very likely don't have. So people are important and scale is important. The third thing I want to talk to you about is efficiency. Many people don't talk about efficiency, but efficiency is critical. Many years ago, a young intern who worked for me was looking for sort of educational assignments. And I asked this young person to pick 25 TSXV junior resource companies at random and look at 5 years of income statements and balance sheets and tell me what facts stood out. Now, the truth is, I didn't know what facts might stand out to them. I wasn't interested in the results so much as the method by which they attacked the challenge. What came back interested me. What came back was that of the 25 juniors selected, the mean expenditure on general and administrative expense was 65%, meaning that 35% went in the ground and 65% went to salaries, coffee machines, conferences, wherever it went, rent, things that were unlikely to generate exploration success. It's important that a junior company have the scale to overcome the general and administrative expense, which is required to run a public company. If I, as an example, generated an exploration target and I farmed it out to a major might allow me 10, 12, maybe even 15% overhead allocation in the budget. That's the market for general and administrative expense. It costs $250,000 a year minimum to keep a Canadian public company alive. So if you're going to keep general and administrative expenses below 25% of total expenditures, given that $250,000 at a very minimum is required to keep the company alive, that means that the company has to have the scale to raise and spend at least $1 million a year. To the extent that, as an example, the management teams of these companies want to be paid market scale for what they do, those numbers become much, much, much larger. So keep in mind efficiencies as they relate to capital expenditures and general administrative expense. The cost of capital is expensive. It is important to understand too. Understand the promotional capabilities of the team and understand the infrastructure around that. How do they raise capital? When do they raise capital? Do they try to raise just-in-time capital, minimizing dilution but running risks? And in particular, look for companies that have a track record of migrating from the Toronto Stock Exchange to either NASDAQ or the New York Exchange. It is true that American investors have found their way to Canada. It is also true that the easier you make it for investors in the largest savings and investment market in the world to participate in your company, the lower your cost of capital. Many managers hate doing this for the easy reason that listing in the United States increases your general and administrative expense and increases the risk to officers and directors as a consequence of Sarbanes-Oxley. That notwithstanding, while it may be in their interest to confine themselves to the Toronto Stock Exchange, it's in your interest as a shareholder to avail yourself of the lower cost of capital inherent in the liquidity and the depth of the U.S. market. Finally, it's important for you as a speculator to understand how value is created in junior resource companies. And that comes back to regarding these things as intellectual capital businesses rather than physical capital businesses. You make money in junior resources by answering unanswered questions, by increasing the body of knowledge that the investment community has with regards to the investment thesis around any individual property. It is important that before you invest in a junior resource company, you quiz the management team and say, what's the most important unanswered question here? What's the unanswered question that you're going to be working on? How are you going to increase my knowledge and the market's knowledge about your exploration thesis? What are the probabilities of a yes answer? What are the probabilities of a no answer? What would you estimate, very roughly, a yes answer to be worth? How long will it take me to get a yes answer? If it's going to take, as an example, a year to answer the unanswered question, and a speculator is nervous about holding stock over a long weekend, what they hope to achieve, they can't achieve because they don't have a realistic time frame with regards to answering unanswered questions. So I hope, in summary, people have come to understand as a consequence of this that the sector itself is treacherous. The fact that it's treacherous means that if you do the work and identify the good people who have a track record of success, who are operating at scale, who are efficient with regards to expenditures, and who seek to broaden rather than constrict their capital access, will do better than others. For those of you who like this overview of natural resource investing and want to learn more about my own approaches to it, I'm going to give you an offer. Any of you who care what I think about your existing natural resource portfolio are invited to come out or are invited to find out. Go to a website, ruleinvestmentmedia.com. List your natural resource stocks. I'll personally rank them 1 to 10, 1 being best, 10 being worst. and I'll make comments on individual issues if I think my comments might have some value. Note that I'm about 300 responses behind right now, so if you don't get a response for a couple of weeks, that's okay too. Once again, ruleinvestmentmedia.com, list your natural resource stocks, I'll rank them, I'll send them back. Ladies and gentlemen, it's been a pleasure talking to you. It's nice to see people who have taken the time to educate themselves in this field. Visit the various sponsors of this conference. Ask them to identify the unanswered questions. Learn from them about G&A relative to total expenditures. Ask them about their corporate efficiency. Ask them about the scale of their exploration efforts. And ask them about the past success of the management teams, the directors, and their financial backers. Best luck to all of you. Good fortune. Thank you and goodbye.
Hello. Thank you all for tuning in here today. I'm Andrew Pollard, CEO and president of Blackrock Silver. We're trading on the Venture Exchange under the symbol BRC, and we're on the OTCQX on the symbol BKRRF. Here we are in March, and there's going to be a lot to look forward to in the short term, and I'm going to be certainly making some forward-looking statements here. Not too far forward, though. We're expecting within the next few weeks here to have our maiden resource estimate out there and delivered to market. So certainly, one of the most compelling times we've had as a company since we really got started. As you can see on the stock chart here, it's been a wild 3 years. Management came into the company in May of 2019. We were 3 cents and $1 million market cap. Since then, we've now currently trading somewhere around $140 million market cap, and we've hit a high of $1.61. You'll see that high of $1.61 happen on the back of our first drill result into what's become our flagship project during the summer of 2020. Since then, we've become more than a one drill hole wonder, and this maiden resource estimate, which I'm going to be telling you about today, is on the back of that one drill hole. So we've gone from first drill hole in the database on this project to delivering a maiden resource in the span of about 1.5 years worth of drilling. So it's been a full out sprint. And since we've done that, we've caught the attention of some very big players in the industry. First Majestic Silver has come into our last few financings here and have been very supportive and interested in what we're doing. As has a person by the name of Eric Sprott, who many of you might know, seems to like silver just a little bit. We've now turned over our shareholder base. When I took over, it was pretty much 100% retail. To now, it's about 50 to 60% institutional, and a nice mix at that of long-term shareholders, high net worths, and some big technically driven funds who have started making some big bets on us. Since we hit in 2020, we've raised in excess of $40 million Canadian, and we've put most of that into the ground to come up with what we're going to be putting out in the next few weeks here. So what are we talking about? Our flagship project, it's called the Queen of the Silver Camps. We've consolidated the second largest historic silver district in Nevada, which many of you may know is known as the Silver State. Now, we're the first group to go back into this district since production shut down right as the Great Depression emerged in around 1930, which sent everything in the district in terms of the commercially producing mines belly up. And effectively, they've been hiding in plain sight in purgatory for the last 90 years until we got our hands on these independent, privately owned patented claims, brought them together and started drilling them. So our first drill hole into the many historic mines on our property, added about $100 million to our market cap overnight because it confirmed the thesis. And that thesis was simply the historic miners got cut short, not due to running out of goodness in terms of the rich silver and gold veins that this district had. They got cut short because of the business side of mining and metals prices tanking in the 1920s. The Tonopah Silver District, which we now control half of, produced historically at 100-to-1 silver to gold ratio. So this is a pure play precious metals district, but it's silver primary, which puts us nearly in a league of our own. There's very, very few companies out there, silver companies, that just produce precious metals. Most of them have lead or zinc or copper thrown into their silver equivalents. With us, we're high-grade silver and gold, and historically, in the span of about 30 years, they produced 174 million ounces of silver, and 1.86 million ounces of gold from 7.5 million tons, meaning this is a high-grade district at that. You know, many of you that are invested in silver know that well over 2/3 of all the production in the world comes from South and Central America. That's also, you know, why we've been able to stand out the way we have, is because what we have in Nevada puts us in a league of our own. Not only since we started drilling have we become one of the top 3 most active silver exploration projects globally in terms of meters drilled, and we've done over 110,000 meters of drilling in the last year and a half or so. But it puts a big target on our back, simply because if you see what's going on in Peru or Mexico right now, the 2 largest silver producers by a country mile, you know, the silver primary companies there have lost their mandate to do M&A down there anymore. So, you know, you've got all the mid-tiers and majors that are producing down there looking to get out, simply because of you know, the taxation or the cartels or nationalization or blockades. We're pretty much the only game in town when it comes to high-grade, pure-play silver primary gold ounces outside of Latin America right now, which is one of the reasons why First Majestic came in right away. And I think once we get this maiden resource out in the next few weeks here, we'll have a huge target on our back in terms of potential takeout or M&A. Being a potential target. So, you know, this district, it's literally the halfway point between Las Vegas and Reno. And it was, you know, discovered in 1900 by this gentleman here in his trusty mule. They were walking from one ranch to another and stumbled upon some big outcropping veins at surface, you know, in the desert of what's become the Walker Lane district of Nevada. And that spurred one of the most significant discoveries in Nevada mining history, and it led to a lot of the rest of the Walker Lane district being discovered as well, including the nearby deposits like Bullfrog and Goldfields. The story of the district is very simple. It was discovered by that gentleman Jim Butler and his mule in 1900. They did no drilling back in the day. These were rich, juicy veins of silver and gold-rich material, and they started mining it right in 1900. And it was like a hockey stick chart going up over those early years. You'll see it started dwindling around World War I there for obvious reasons. But the real nail in the coffin for the district was in the mid-1920s when they unpegged the price of gold and silver. Going into that, they were buying silver for about $1 an ounce. And after that, within the span of about 3 or 4 years, silver was trading for 35 cents. It sent everything in the district belly up because you know, these are underground mines. They took out significant money for development, and you know, when you lose 2/3 of your commodities price in the span of a couple of years, it sort of throws a wrench into best laid plans. So this is what the district looked like in 1912 on the bottom of your screen there. Now that the original discovery was made from the big outcropping veins on the east side, and this is a high grade set of a vein corridor that goes east-west. So effectively, all those early years of production that you saw on your screen previously, that happened on the east side from surface, and they did no drilling back then. They just started mining and following these veins underground. When they lose it, they drift across, and then they keep mining it. So all that early years of production were on the east side. A lot of those mines got mined out as they went, and production slowly moved westward. So in the 1920s, it was the west side of town that all the action was happening on commercially. It was the west side of town that they were continuing doing development work with an aim to continue mining, and it's the west side of town which we've now consolidated. So if you cut this historic map down the middle, we control the entire western half there, and we're literally going back into historic mines, picking up right where they left off, and we've been hitting at a high rate ever since then. Another thing I'll point to here on the satellite map here is the town of Tonopah. You'll see we're walking distance to the town of Tonopah, and that yellow line that cuts across our property there, that is US Highway 95, which connects Vegas to Reno. So we're literally drilling on two sides of a highway, walking distance to a town. And it's that purple portion there, which has been the missing link for the district. It sounds too good to be true, and it almost is, but it isn't. This purple claim package here was the holdings of a company called the Tonopah Extension Mining Company. It started gobbling up all the other companies in the western half of the district in the late 1910s. And it was this company that had multiple active development and commercial projects going for it when metals prices tanked. It went into Chapter 11 in 1930. It was picked up by a family, and it was held ever since. It was held ever since we got our hands on it, meaning we're the first group to go back in and start drilling this thing since production shut down. In terms of infrastructure, that's our drill rig set up in between a Comfort Inn and a Subway sandwich shop. Now, just what did the historic miners leave for us? Well, this is what we've been hitting with the drills ever since. Now, since we started drilling in June of 2020, we've now hit 10 different veins. If you lay them end to end, that's about 6 or 7 kilometers worth of mineralized strike that we've laid out in 2 distinct target areas. The northeastern portion of our project there is an area called Victor. Victor represented the thickest veins historically in the district. They mined it down to around 1,880 feet. And where they stopped was where they encountered water. Our first drill hole is targeted that Victor area. We hit 29 meters of a kilogram per ton silver equivalent, and we've since identified 3 other veins there, which the historic miners didn't even know about. Our maiden resource estimate, however, is is within this yellow polygon area. This yellow polygon area represents another area which the Tonopah Extension Mining Company, which I told you about earlier, was getting ready to mine. They actually did development work on this area at the 1650-foot level, and we're preparing to mine 4 of these veins, which we've now established. So we picked up right from the historic workings where they left off, and we've now hit up to over a kilometer on some of the veins there beyond beyond where they were able to get started. So another thing you'll see here, so this is the area, this vein corridor here. We've hit 6 veins. This is going to be the basis of the maiden resource we're set to deliver very shortly here. But this entire time since we've been drilling, we've always been trying to establish upside. So this resource that we're doing right now is going to lock in the ounces in the ground that we've now established just in this one area on the project. Obviously, we've got blue sky baked in at Victor, where we've got another 480 meters of strike established across multiple veins. But these other arrows that I've denoted here beyond the resource area are recent step outs that we've hit on the DPB veins beyond the resource envelope. So we know the footprint of mineralization goes well beyond what we're going to be putting out in this resource. We've tracked it over multiple veins, so there's going to be a lot of upside built in addition to what we backstop our valuation in on this maiden resource here shortly. In addition to the step outs we've already connected on, these yellow icons here indicate step outs that we've just finished drilling. And they go all the way to the northwestern portion of our property boundary. And we should have those results out sometime either over the next few weeks or soon thereafter, delivering our resource estimate. And if we hit on those, I mean, these are up to a kilometer beyond the confines of our resource estimate. If we hit on those, not only is it going to confirm a thesis we have in terms of our geologic interpretation, how the veins start curving up north-northwest, but that's going to add a significant amount of mineralization to what's already known in this project. So we'll be laying out a pretty substantial phase 2 exploration program very, very shortly here. This is that Victor vein I told you about, where we hit our very first drill hole and hit 30 meters, and have now established about 480 meters of mineralization across multiple veins. And this is the DPB area, which is forming the basis for that mineralization. So what you see with our drilling here now is we've done a lot of different fanning out of holes to get that drill density down, to establish continuity in all of the veins that we've been drilling, and get this table to market very shortly here. This is our Merton vein. This is our biggest vein in the district so far. This is part of that DPB area, and we've got up to 1.5 kilometers of strike established here. It's open in all directions. In fact, actually, I think we just recently added another 350 meters along strike to that. So that's a big, big vein. And as part of the resource estimate we're doing, we've done a substantial amount of de-risking the project from a development point of view, including some initial test work from a met perspective. What we show is that not only is this a high-grade silver gold district, But the ounces that we lay out will be recoverable ounces. This has a very, very good cyanidation profile to it, where we're getting plus 90% recoveries for gold and very, very high, well, 87% average recoveries for silver, many of the veins averaging over 90% for silver recoveries, meaning we're nearly in a league of our own with silver gold opportunities. We're also still focused on upside. We've got 20 square kilometers of new claims laid out. The green area on your map is our Tonopah West project. Those are all patented claims. The blue area here represent an area that we're drilling right now. This is undrilled new targets, which we've got a drill turning as we speak, trying to make a new discovery while we lock in the ounces in the ground down in Tonopah West. But these are discoveries that historic miners would have missed because they're undercover. And our interpretation based off 110,000 meters of drilling indicates that we've got some very compelling blue sky targets laid out here, which we're testing right now. So multiple new targets being tested in the works while we await these step outs in the resource here. So definition of catalyst rich. And with that, I'll leave it here. Thank you.
Good morning, everybody. This is Brian Skanderbeg with GFG Resources, and today I'm going to talk to you about what's exciting with our company in both Timmins and in Rattlesnake Hills project. Just a cautionary statement, I will make forward-looking statements, and I would refer you to the language on our release. When you think about GFG, we're a district-scale explorer. I think we've got a great team and really focused on 2 district-scale opportunities, one in Timmins and one in Wyoming. Ultimately, this is a company that's had a great track record of finding mines, building mines, and I think what you're seeing is a very aggressive strategy and disruptive strategy. Before I go into the details of why we think GFG's got a bright future, just a little of the share structure here. We're well financed with about $4 million in the bank and a market cap of around $25 million. Strong retail, corporate, and insider participation in this company, and that's been a theme since we've taken ourselves public. Very proud of our shareholder record. The chart on the right side looks a little better if you'd updated it for today. We've actually broken out. We're in the sort of 17+ cent range, and I think the technical chart are looking very strong these days. From a people perspective, very strong team of mine builders, discoverers, and strongly transaction oriented. When you think about gold exploration, I think this is a really relevant point on this graph is discoveries are rare. And the trend of this graph is generally moving down, which means it costs more dollars to find a given ounce of gold. So you got to find the right teams. I truly feel GFG is one of the groups that can unlock relevant discoveries, and that those discoveries are going to be very valuable moving into the future. We put big belts of land together. We look at our cycle. We look at deal structure, and we're a team that's found mines before. I think that's a very strong recipe for shareholders looking for teams that can find new mines these days. And when you think about where we're focused in Timmins. So this is what I call our sandbox. It's about 120 million, 130 million ounces of historic production, reserves and resources. And we own 3 large land positions here, approximately 750 square kilometers. I think this is a great place to make the next relevant discovery. I think there's a strong track record of discoveries in the not too distant past. And most importantly, there is a ton of infrastructure in this belt. And that infrastructure ultimately makes any discoveries more valuable. So here's where we're working. The Penn, Montclair, and Dore are our core assets, both east of and west of Timmins along some major structural corridors. Zooming in a little bit on Montclair, this is what we acquired back in October of last year. Very quick turnaround time from deal execution through a deal program to announcing high-grade results in January of already 2022. This is on the Pipestone break out east of Timmins, flanked by mines, the Taylor mine, McEwen, Black Fox, moving to the east of us, Fen Gib, and to the west of us, Clavos. These are highly productive breaks that host mines. And we have acquired a 10-kilometer block called Montclair. This is strategically located. It is a very compelling asset, and it's where GFG is focusing the most of our capital these days. Zooming in a little more, there's 2 main corridors we think here, Montclair and Canamax. MC, and CX. These were historically tested by about 120 drill holes. Most of those prior to 1967, though. And when you think of the rationale and why we were attracted to this, it's because it outlined a large gold system. But back in the 60s, they weren't looking for bulk tonnage. They were only sampling 5 gram material. And when we looked at the data, we thought, you know what, this is a system that has a lot more to offer. We executed the deal with a partner, IEP, which became a relevant shareholder of ours and strong backer. And we moved forward with testing Montclair and Canamex. We see good scope to grow these systems along trend. In just that little area in the middle of Montclair that I flag in red, that's 1.5 kilometers. So there's a large gold system here outlined from historic drilling. And we're working within that system, proving the character and understanding the controls and moving towards something that we think is a very relevant size here. So looking at a cross section to talk to you about the main 2 corridors, Montclair on the hanging wall, the north side of the break, the Pipestone, which is the break that hosts Clavos. This is the Canamex trend. These are some historic drill holes, lots of 10, 20, 30, 50 meters at 1 gram to 1.5 grams within the Montclair trend, where it was sampled properly, which is a very small portion of where it's been actually tested historically. But also these footwall corridors, much higher grade. I'm going to reference some exceptionally high grade results from our first drill program. It's on those footwall splays. And then stepping over to Canamex and CX trend, where this thing's open. It's not tested below about 150 meters. It's the direct analogy geologically to the mine next door at Clavos. So what did we announce? We stepped up here and drilled 14 holes in 2021 Q4. We've put out 2 releases of those in January already. We have 9 holes pending results. Really, really encouraging results. 26 meters at 4.8 grams per ton. I'm going to talk to you a little more about that intercept, but also bulk tonnage intercepts, 40 meters, 30 meters at 1 gram to 1.5 grams in separate lenses in the same hole. So we're seeing what we want to see, which is a large-scale gold system, and we're relating and understanding the system more, and we can tie it to what was drilled historically and then think bigger picture about where we go in 2022. Exceptionally encouraging results from our first 5 holes on this. And when we look at what was hosted and specifically in those holes, here's the 5 gram or 4.8 over 26 meters. The upper graph on the map on the right shows the nature and relationship of these footwall splays to the main zone. Very encouraging. And look, we're literally 100 meters from surface. System's been open. The deepest hole in this property is only about 400 meters deep. And even at that, it's a very restricted area that's been tested to that depth. So very encouraging. This is all undercover and exemplifies what we think Montclair can yield in terms of some of these intercepts. When we look at the core, exceptionally encouraged. This is not a high nugget system. There's no assays greater than 30 grams per ton in this composite, but I think there's 7 total assays greater than 10. What to me that means is you got a good, reliable system. It's repeatable. It's not skewed by high nugget effect. And the textures we're seeing are very encouraging. An intense gold system, 3 or 4 stacked lenses sitting here in both felsic volcanic and mafic volcanic rocks. Great looking Timmins style system. And when we think about what we have pending, we show you some pictures on the bottom here. So we have 9 holes pending, and the rocks we're seeing in those are also very encouraging. They're both from a local step outs, 20, 50, 75 meters from that high grade intercept. And they're also more regional step outs, 250, 350 step outs to the east, where the figure on the right shows you some great sulfidation and veining, all the things we look for in a good gold system in a step out hole that's pending assays. So that is the Montclair trend. It is about 8 kilometer corridor. 1.3 of it's been tested back in the 40s and 60s, showed some good fertility. And then there's Canamex, which is a southerly one. We're going to be drilling this later this year. Great looking system, directly analogous to the mine next door, same age of intrusives, nice alteration. There's about 8 kilometers along trend from this across our property, which we're quite keen to get the drill bit on as well. GFG also has 2 other properties, one Penn and one at Dore. These are earlier stage projects. We've got some great results on here. We continue to allocate capital in here, doing earlier stage work. We'll see if we do some drilling later this year. I still really like this block of ground. This is west of Timmins. It's in itself about 60 kilometers of strike length of prospective stratigraphy and structures. I think there's still a mine to be found on here. GFG is still going to focus on that in 2022 as well. Dore is the southerly of the 2 blocks west of Timmins. It flanks Newmont, associated with Borden, east of Borden, and west of IM Gold's Cote system and Cote mine that's being built. This is a very strategic and interesting and prospective block of ground. We're looking at various strategic paths for this project, and we'll continue to focus on Dore, or on Penn and on Montclair. But this is a good property. I'm very happy we have it in our portfolio. So overall, GFG is going to spend about $3 million and drill about 10,000 meters of Timmins this year. Look forward to a number of strong catalysts, both in local step-outs or regional step-outs, and then also testing some of the greenfield targeting. And then you see the programs down at Penn and Dore as well. We're well financed, as I mentioned, with the balance sheet. So there's a good string of catalysts coming down the pipeline from our Timmins portfolio. GFG is unique in the sense that we have these two main asset bases: Timmins, which I've just talked to you about, and Rattlesnake, which is a partner with our private company called Group 11 Technologies. And these guys are looking to in situ mine gold. And I'm going to talk to you about what they bring from a technology and how we're leveraged to it. Ultimately, this is a joint venture partnership between Group 11 Technologies and GFG. There's about 100,000 meters of drilling in this mine and in this deposit historically. We think it's very amenable to looking at new technologies and what could be very disruptive technologies to the gold space. So we partnered with Group 11 Technologies. They bring immense credibility and understanding of in situ leaching, particularly to uranium. And now they're adopting that into the gold space with their partner and proprietary leach technology. Here's a cross-section through the deposits, well drilled off, oxidized down to about 150 meters, and there's a whole camp of alkaline gold systems that are present here and under partnership with Group 11. We have a deal structure that allows Group 11 to finance the exploration and development of the asset through to commercial production to earn about 70% of the property. There would be staged equity and cash payments associated with that. And this is a pretty conventional option style agreement with Group 11 managing the funding. We're in stage one of the deal here, which is metallurgical testing, proving the technology can work and leach the ores and deposit specific to Rattlesnake Hills. What does Group 11 have? They have proprietary leach technology, and ultimately this is controlled by their parent, Envirometals. Envirometals has licensed this technology to Group 11 to apply in an in situ setting. Patented chemistry, non-cyanide based gold extraction. This is really relevant these days when ESG is the focus and we're all looking to do things better, more environmentally sound, lower footprint. This is a technology that can definitely have attractiveness in this landscape. So you look to the left, typical in situ mine, boreholes going down, solution being pumped, leaching the gold, and coming back up into a water treatment plant and then recycling the fluid. How does their ligand work and why aren't we using cyanide? This is the graphs that really convinced me this thing's got a chance. The kinetics look fast. They look just as effective or more effective than cyanide. The chemistry is non-benign. So in terms of the regulatory framework, there are some red flags going up about putting cyanide into groundwater. This is purely a salt, some weak acid, and very analogous to the chemistry of the fluids that were used in either uranium or copper. I list some of the patents here, very, very sewn up in terms of the IP. And I think this thing's got a great chance to be a success. And ultimately, why Rattlesnake? Well, Rattlesnake is surrounded by in situ uranium mines. The regulatory framework gets in situ mining. That's logical. It's a step that I think the state and is very much accepting of. So we have a deposit that's drilled off in a great jurisdiction that's acceptable to in situ mining. And these are the reasons why we think Rattlesnake project particular and the partnership with G11 can work. So when you stand and look at GFG, what are our catalysts? Moving back to what we did last year, we finished our raise, we drilled 10,000 meters. Moving into 2022, we've got pending results. We've got a drill program starting up here in February yet. And I do think that there's going to be strong results coming out of that, and also the results that are at the lab. Moving into H2, we feel there's credible traction to be gained from the Group 11 partnership, continued drilling in Montclair, and I also never discount what we can do at Penn as well. So at a high level, GFG brings 2 district scale assets. There's lots of irons in the fire to win with the story. Technical team that's done mines before. Balance sheet looks strong. We're very, very effective at putting money in the ground. And ultimately, we have strong leverage to discovery in Timmins, at Montclair, at Penn, Dore, and to success with our partners, Group 11 Technologies in Wyoming. This is a really exciting time to look at GFG, and I'm thanking you for the opportunity and for SIX for putting on this great conference in 2022. Thank you.
Hi, I'm Dan Wilton, the CEO of First Mining Gold, and it's a pleasure to be meeting you virtually here at the inaugural SIX Spring Virtual Conference. The team at SIX has been great partners and great supporters of ours, and so we're delighted to be participating here in this very important event. I'm going to walk you through the First Mining Gold story, and I'll be making a few forward-looking statements as we go through it, but want to leave you with a good sense of what the opportunity is with First Mining and where we're going forward into a very catalyst-rich 2022. So First Mining was started in 2015 by Keith Neumeyer, very well-known mining entrepreneur, CEO of First Majestic Silver, the founder of First Majestic Silver and founder of First Mining. Keith and a few like-minded folks in 2015 and 2016 assembled a portfolio of gold projects at the bottom of the market when gold was $1,100 an ounce. It's obviously topical these days as we're in a period of significant gold price appreciation. I think that's going to continue here. I've been here at First Mining since 2019. And I think the story has changed quite a bit in the last year as we've I think taken advantage of some opportunities to get some partners moving some of our projects forward, and importantly continue to really move forward a number of our 100% owned projects. Our real focus and flagship project is the Springpole Gold Project in northwestern Ontario, just east of the Red Lake Gold District. It's a 5 million ounce resource that we are taking through feasibility study and into the environmental assessment process this year. So very exciting movement on Springpole. We have three main partnerships that we've formed over the last couple of years to find partners to advance some other projects in our portfolio. We'll talk about that. And other wholly owned projects, our Cameron project, real diamond in the rough, just north of the Rainy River Gold Project in northwestern Ontario, and a collection of very interesting gold projects in Quebec on the Porcupine-Destor Fault near Rouyn-Noranda, and a portfolio of royalties that we've accumulated over the course of the last couple of years as we've rationalized the portfolio and really given us the capital to be able to focus and the time to be able to focus on Springpole. So again, at a high level, advancing our Springpole Gold Project, it's a very large and robust project. There are very few projects in the world that can produce 300,000 ounces plus a year. Springpole, we believe, is one of them, but at this, 4.6 million ounce of gold and 24.3 million ounces of silver in M&I resource is sitting on the edge of an almost unexplored, highly prospective greenstone belt that we've significantly increased our ownership position in. So that's going to become a far more important part of the First Mining story going forward. We also, as I said before, have significant equity ownership and project interests in other development assets being advanced by our partners. In particular, we're a 15% owner of Treasury Metals, a TSX-listed company advancing the Goliath Gold Project just outside of Dryden, Ontario. And we're still an owner and a partner with Ateco Minerals in the Pickle Crow high-grade gold project. They've done a great job of increasing the ounces there. They've almost doubled the resource there on a JORC basis over the last 2 years, with almost 100,000 meters of drilling that's been done at Pickle Crow. Great partners there. And Big Ridge Gold starting to get the first real exploration results back at our Hope Brook project in Newfoundland. So the important part of this is First Mining continues to have exposure to in excess of 100,000 meters of drilling a year. I think we're going to see similar numbers coming in this next year as well. Real exposure and leverage to exploration discovery in those portfolio assets. So we'll talk a little bit about the valuation of First Mining. I'll be the only CEO here that tells you that they're undervalued relative to their peers. But I think it's something we can certainly demonstrate. And I think importantly, over the last couple of years have grown our team to really put a best-in-class development and environmental team to help us unlock this value. So on that, the headline numbers, we're sitting today at a market cap of just shy of 200 million Canadian, 30 million of cash on hand at the end of the year, so well funded to do the work we need to do at Springpole going forward this year. But on top of that, these partnership interests and the shares we hold in our companies, the other partnership portfolio companies, those strategic investments, all told, that adds up to almost $120 million worth of value. So some of those projects, I think, give us some real opportunity to stay very well funded to move forward. As you see here, this is sort of how we think about the fundamental value of the company, sitting today at a market cap, again, just shy of 200 million. Cash, marketable securities, and strategic partnership values sitting, a significant portion of that, well north of half at this point. So that leaves you with the NPV of Springpole, $1 billion US NPV. We've just got some illustrative per ounce values for Cameron and Quebec. We think those don't do those projects justice, but you can see here, obviously, significant leverage to the upside in value, established fundamental value in these projects. So we think, when we revert to where the peers are trading, and we believe we will as we hit milestones at Springpole over the next couple of years, this 0.06 times price to net asset value multiple should be trending toward a 0.5 or 0.6, which is where our peers and comparables trade as they get to that construction-ready permitted project status. So lots of upside in the share price from here. This is just another illustration of, the advanced stage developers trading at in excess of $100 an ounce. We're trading at about $13 an ounce. So again, multiple X return profile with First Mining and great leverage to a higher gold price. So we'll talk just a minute about the Springpole project. This is one of Canada's largest undeveloped open pit gold projects. With our pre-feasibility study we put out early in 2021, established reserves of 3.8 million ounces of gold and 20.5 million ounces of silver. The development profile has an average annual gold production of 335,000 ounces a year in the main 9 years of its mine life. And we think that is really just the beginning of the opportunity at Springpole when we start looking at what we believe is really true district scale exploration potential. This is a unique strategic gold asset in a tier 1 jurisdiction. We're 100 kilometers from Red Lake, where one of our neighbors, Great Bear Resources, was just bought pre-resource for $1.8 billion. So we think, again, fantastic neighborhood, great place to be developing projects, and lots of existing infrastructure in place to move that forward. We won't spend too much time on this, but only to say, when you look at the value that developers usually tend to get acquired for down the track, I think it goes to justify some of those numbers we showed earlier of, First Mining sitting at $1 share price or more in a static environment, in an increasing gold price environment. One of the things that's very important to understand, we show it on this slide here, is that every $100 increase in the gold price is $150 million on the after-tax NPV of the Springpole project, $250 million on the pre-tax NPV. So we're seeing here, between $1,800 and $2,000 gold. This is an incredibly robust project, and robust because it's in many fashions relatively simple and straightforward. It's a big homogeneous open pit deposit. It's continuously mineralized. It's got a low strip ratio. And ultimately, we think that allows for very cost-effective low-cost mining. So showing this project in our pre-feasibility study put it quite squarely in the lowest quartile of all-in sustaining cost and cash costs in the industry. So again, a very, very robust project. And we're producing today, this would be vying in any given year of its life for a top 5 mine in Canada, and in some of its years, moving closer to top 3. So really, of that next generation of development projects, one of the most significant in the industry. So one of the things that we've spent a lot of time on in the last year has been increasing our property position around the Springpole project. And you can see here the Birch Uchi Greenstone Belt, which is really, in a lot of cases, an analog of Red Lake, kind of on the other side of a big batholith. Very, very prospective for gold, a number of past producing gold mines, but has only seen a small fraction of the exploration that we have seen at Red Lake. So we think that gives us a real sort of first mover opportunity in this belt. And we're starting now with the addition of James Maxwell, who joined us last year as our VP Exploration, really starting to hone in on what the opportunities are to advance this regional exploration picture. A number of high-grade showings, but there are really a number of different types of deposits that we can look for in this belt. So we're very excited to get going on that. And again, we've almost doubled our land position in this belt over the last 12 months. So one of the things about Springpole is the deposit does sit under the shallow bay of a lake. The development plan involves building 2 cofferdams, dewatering this part of the lake. This is often one of the big questions that investors have about the project. I think this is something that's now been studied for 10 plus years. I think we've got, as we move through feasibility and move through the environmental assessment process, we're very confident of our ability to demonstrate that this is something that can be developed in a responsible way. And what a lot of people forget is that on reclamation of this project, as the lake ultimately fills back up here, this is going to be one of the smallest footprint open pit mines in the world. So we often get asked if it's something that can be done. Let's say the answer to that is it's been done a number of times in Canada, and we have a couple of examples up here with Meadowbank and with Gacho Quay, because Steve Lines, our VP Environment and Community Relations, was part of the permitting effort as a regulator and as a proponent in these 2 projects, which involve far more complicated water management on their sites than we've had to deal with, or we will have to deal with at Springpole. But it's a big issue. How do we tackle it? How have we tackled it? It's by getting the best team we can, both internally, having hired Steve and his team that came across. They spent, prior to joining First Mining, they spent 6.5 years permitting the Hard Rock project, which has a number of very similar issues. And some far more complicated issues in terms of reclaiming a historic mine site. Steve and his team took that from scoping study to construction permits. It's now in construction, owned by Equinox Gold and Orion. So we've got a great internal team, but on top of that, we've brought in the team from Wood PLC, who has literally helped put together almost every large open pit mine environmental assessment in Ontario in the last 20 years. So we think we have the best team there to help us work on that we can. So we're at a very interesting point here in the process. And I think, this slide, what struck me as it has evolved, I joined here in 2019, all of this work was in front of us as we were putting out Gantt charts for how do we get to that construction decision. We've done a lot of work in the last couple of years. And I think we're at a very important point now where we are looking to submit a draft environmental assessment late Q1, early Q2. And I think that really starts getting everyone focused on ultimately getting feedback into the process to allow us to move the environmental assessment forward. So we're targeting that environmental assessment to be submitting as final, in early in 2023. and then ultimately as it runs that process, late 2023, early 2024 for the environmental assessment approvals. At the same time, going through feasibility, which we've now kicked off, and the feasibility study we think is going to continue to demonstrate a well thought out and very robust mine. So lots of very exciting catalysts coming as we move through the development at Springpole. We won't say much more than this about our partnership projects, but again, Treasury Metals moving through to a resource update, which should be coming in the next month or so. Pre-feasibility study later this year, which is really going to define those economics, and then moving toward a construction decision there. They're well financed to get to that point. Ateco Minerals, again, has doubled the resource, high-grade resource at Pickle Crow, moving it through that 2 million ounce mark. Really great team of explorers who've done a fantastic job there. And Big Ridge Gold just starting to get first drill results back at Hope Brook in Newfoundland. We have continued amazing exposure to all these projects through share ownership, through project interest, and through our royalties. So with that, I think we'll say thank you very much for joining us, and thanks to our partners at SIX for putting on this conference. And we'll look forward to hopefully having an opportunity to meet with some of the participants here over the course of the next little bit. But thanks very much for joining us, and we'll look forward to an exciting 2022 with First Mining Gold.
Well, good morning, everybody. I'm going to present. My name is Rick Van Nieuwenhuizen. I'm going to present on the on Contango Ore. I'm the President CEO, and obviously we'll be making forward-looking statements. And I do point out our cautionary language around reserves and resources. So Contango Ore is working in Alaska. We have our main project, Manh Choh development stage project, joint venture with Kinross. On land owned by an Alaska Native tribe, the Tetlin tribe. Most of my talk is going to be on that. I'll introduce you to our Lucky Shot mine, which is a high-grade former producer, produced ore from about 40 grams per ton. So we're excited about that. I'll talk briefly about our earlier stage exploration projects at Shamrock, Eagle Hona, and Triple Z. Again, all in Alaska. Just a quick overview on our corporate structure. We have 6.75 million shares outstanding, and that's not because we've rolled them back 100 to 1. That's just prudent management of our share structure. We have $17 million in cash as of the end of January. A strategic investor in the Alaska Future Fund, which is a sub-fund of the Alaska Permanent Fund, a $83 billion fund, sovereign wealth fund, basically owned by the state of Alaska. So we have very good shareholders. And very tight structure, as you can see. We're traded on the NYSE American under the symbol CTGO. So I'll introduce you to Manh Choh. The yellow star there is a location of the Manh Choh project. The red star is the Fort Knox operation of Kinross. Contango found a 1.3 million ounce gold deposit, average 4 grams per ton, starts at surface, located just off the Alaska Highway on land owned by the Alaska Native tribe. At Tetlin, we have a business arrangement with Tetlin. It's a standard mining lease, 30-year type mining lease. 2 years ago, we formed a partnership with Kinross, whereby we arranged for the sale of a 70% interest in the project to Kinross for $93 million. 30% of that came from ourselves, and 40% came from our former business partner, Royal Gold. The whole reason we did this arrangement with Fort Knox was to be able to truck our ore up to the Fort Knox mill. So just run a mine material, truck it up to the Fort Knox mill, and process it at their facility there. Obviously, that lowers capital costs significantly. It lowers our environmental footprint, makes things much simpler from a permitting standpoint, and hence overall lower execution risk. Here's the project. It's located on top of some hills in the Tetlin region. Very easy place to mine. You don't have a lot of water when you're on top of the hills here. Last year we spent $19 million on basically readying the project for feasibility and permitting. all infill drilling and getting all the information gathered for both feasibility and permitting. The plan then is to complete the feasibility study later this year in the second half, start construction of our operations camp, our construction and operations camp this summer, maybe do some road work here at the site to make the road, it's a drill access road round. We obviously need to have it useful for the mine haul trucks. So, and that the mine haul trucks will mine the ore at the site and then haul the ore down to a transfer point closer to the highway for the highway trucks to run it up to the Fort Knox mill. Production is planned for 2024, and obviously we'll do a lot of exploration over the course of the next many years. We did approve a $25.6 million budget this year, again, to complete feasibility study and complete the permitting process. Based on guidance from Kinross as of July of last year, they anticipate producing, on average, 220,000 ounces of gold from the Manh Choh operation. Our share would be 66,000 ounces. That's a 5-year mine life. Cutoff grade, with using an elevated cutoff grade, we see a grade of about 6 grams per ton being delivered to the Fort Knox mill. That's about 10 times the grade of what Fort Knox normally processes. Capital cost, they gave a range of 105 to 130. I'm going to assume, one, that we're going to use the high end of the range, but also we are seeing the signs of inflation just move through the whole economy. So I am definitely going to caution that I'm expecting that number to increase modestly. It's not a big number. Obviously, we don't have to build a mill in the tailings facility, so but I do caution that we're likely to see that number increase somewhat. Same with all-in sustaining costs, which were guided last July at $750 an ounce. A big part of that obviously is trucking the ore up to the Fort Knox mill, and obviously that depends on the price of diesel. When we did this, I think the barrel of fuel cost was somewhere around $65 a barrel, and obviously oil is over $100 a barrel last time I looked today, and so our price for diesel will likely go up. I think the price of gold, as we will also see, is also going up. So I think we will, in the plus or minus range, we should maintain our $1,000 margin on a per ounce produced. So at least that's my guidance for right now. Lots of meetings going on. We've of course had a long relationship with the Tetlin tribe and the local villages, Tanacross and Northway, but now with the transporting the ore up to the Fort Knox site, we certainly are meeting. And I say we here, it's the royal we. Kinross is the manager and operator, and they're obviously conducting all of the engagement with the communities all the way up to through Fairbanks and up to the Fort Knox mill. 400 to 600 jobs anticipated. A lot of mining and trucking related jobs, mechanics. These are all good jobs. They pay $130,000 a year, and obviously a lot of other benefits to the community in terms of local hire, goods and services. Tetlin Village itself will receive a royalty. It starts at 3% and then graduates 1% to cap out at 5% every 5 years. One of the things we're doing is we're building a man camp just outside of Tok. And when we finish up with the project, that camp will be turned over to the tribe, and they can use that in the future for an elders facility. So I think some good, smart, forward thinking on bringing long-term benefits to the community. So the highway, the Alaska Highway here behind the bushes, there's the Tetlin project in the hills, the Manh Choh project in the Tetlin hills. 240-mile drive up to the Fort Knox mill. Fort Knox has been operating for 25 years. It's a large capacity mill, and will basically the contribution of roughly 1 million tons of 6-gram material will basically double the size, or the output, I should say, of the Fort Knox mill. So it's a pretty significant increase in overall production for the Fort Knox facility. Fort Knox is both a mill and a heap leach facility, but this adding our ore to the mix will basically double the output of the mill and bring it up to somewhere in the neighborhood of 500,000 ounce a year producer for the overall Fort Knox facility, both heap leach and and mill. I mentioned the $19 million program, basically all the infill drilling for measured indicated resources, or sorry, for measured indicated resources to support the feasibility study, metallurgy, really good metallurgy on this project. It is a sulfide ore, but recoveries are in the mid 80s to mid 90s. So overall, very, very good metallurgy. Pit slope stability studies, hydrology, et cetera. Again, everything to support both permitting and the completion of the feasibility study in the second half of this year. Very small footprint. Again, we're not building a mill. We're not building a tailings facility. We basically have two small pits, the stormwater drainage that you'd normally have around any construction site, truck shop, Ratco trailers for offices. We did approve the $25.6 million program again to complete the feasibility study in the second half of this year and hopefully wrap up the permitting later in the year. Lots of exploration upside here. You can see the two small dots there that represent the North Manh Choh and Main Manh Choh deposits, and this is golden soils along big structural trends. These are skarn type deposits. They tend to be somewhat potty, and so you need a lot of drilling to define an ore body. This slide is about 50 square kilometers and represents less than 3% of the overall mining lease with the Tetlin tribe. So lots and lots of exploration upside here. So while Kinross is moving the project forward through feasibility, permitting, construction in 2023 and production in 2024, that leaves us free to work on our other projects. And I'll give you a quick introduction to those. You can see here the Manh Choh site itself and the Tetlin lease in the gold color there. Adjacent to that, we have our Eagle Hona, our Triple Z projects. Further up the road towards Fairbanks, our Shamrock project, and then lastly, I'll talk about Lucky Shot. Lucky Shot is a quartz vein and free gold deposit. It was mined at the turn of the century and shut down in 1942 with the War Act. It was in 40 gram per ton material. They mined about 250,000 ounces from the Lucky Shot mine proper, about 600,000 ounces from the district, between average grades between 30 and 60 grams per ton. We think this is an excellent opportunity to basically double the size of our production profile. We've consolidated the land position in the district. There's two core patented ground packages: the Coleman Lucky Shot War Baby in orange there on the left or to the west, and the Gold Bullion across the valley to the right, to the east. State mining claims then surround that core block of patented ground. There's other patented ground that we're probably be consolidating in the future. But we've got most of our work right now is going to be focused right on the Lucky Shot area. It's located just behind the first set of mountains in the Talkeetna Mountains, behind the communities of Palmer, Wasilla, and Willow. There are about 100,000 people that live here. It's called the Valley. It's outside of Anchorage, about 40 miles. Anchorage would be about 40 miles to the southwest there. Most of the people who work here or live here work in industry. They're truck drivers and mechanics, and most of the miners, underground miners in the state of Alaska, live out here. The folks that work down at Greens Creek or over at Pogo. It's a very pleasant place to live and very affordable. So we've got good local workforce. The Lucky Shot project is hosted. It's a quartz vein with free gold hosted in a granodiorite. Very simple geology. We've got a large database that we inherited with this project. I'm excited about not only the upside of the high-grade vein deposit that's known at Lucky Shot, but also the regional geology really fits well with finding a large deposit as well. So we have hired the former mine manager from Pogo, Chris Kennedy. He was excited to come over and get back underground after he wrapped up his 8 years at Pogo. So very, very lucky to get him on board, and he can operate our mine safely. Lots of drilling was done by Full Gold, Full Metals, former owner of the project. intersecting the Lucky Shot and Coleman veins. You can see these high-grade intersections, typical of quartz and free gold deposits. You'll drill one hole, it'll have a couple of grams in it, and the next hole will have 1,000 grams. So you need a good sampling protocol, large sample, and a good processing technique for recovering the gold. Just pointing out a few things. Here's a Lucky Shot mine. In the historic mine workings where 250,000 ounces of gold at 40 grams per ton came from. Below that level is the in-search adit. It was put in the 80s. It went back about 2/3 of the way where it needed to go. We're going to basically reoccupy and refurbish that adit and get back underneath the ore body and drill it from the underground. That plan is in place right now. We've got good LiDAR control. There's the Lucky Shot adit. And then here's our in-search adit down below here, which goes in underneath the ore body. We've done drone surveys of the underground, so we know not only the exact survey of the whole underground adit, but also we get a LiDAR survey, and so we understand the texture of the rock, where the fault zones are, where the good standing rock is, and where additional work will be needed. Overall, the mine is in really good shape. The underground workings, we'll refurbish this. This is 8 by 9 foot. We'll expand that 10 by 12. So that work is underway now. Our mine contractor, Atkinson, is on site. We built a snow shed for avalanche control. We have an avalanche control system in place. It's working very well. We do get a lot of snow out here, no question about that. Again, just going over our plan, the Lucky Shot adit and the underground workings, the 250,000 ounces of 40 grams. The first part of the tunnel has now been refurbished for 700 feet. We'll refurbish and expand it out to 10 by 12, the second sort of part of the adit that's in. And then we'll have about 700 feet of new adit to get into the footwall position. We'll have a pilot hole in front of that to tell us exactly where we want to put the drift, which will drift parallel to the vein, about 1,500 feet, and then we establish our drill stations and just drill the heck out of this thing. I'll wrap up there with our Manh Choh project is on a good fast track with Kinross, who paid $93 million for their interest. So they're very motivated to get this thing going. As I said, it doubles the mill output of the Fort Knox milling operation. So a very important asset for Kinross. I think especially now with the things going on in Russia, I think having North American production will be even more important. The plan is in place for us to be able to be producing in 2024 66,000 ounces of gold. I think we maintain our margin. I think our costs do go up, but not to a point where obviously this is a high grade mine. We're not going to see the margins erode too much with such a high grade ore body. Lucky Shot, I think, creates a great growth opportunity for investors. We think there's an opportunity to find between 500,000 and 1 million ounces of gold and develop a mine plan in the next couple of years where we can then pretty much double our production profile from where we will be with the 66,000 ounces for Manh Choh, and obviously we can use the cash flow from that to build a second mine. So we know Alaska. We've been working up here a long time. We know how to get things done up here, and I'll sign off there, and I'll look forward to questions when we meet in person. Thank you.
Good day, everyone. Thank you for joining us at the conference here. SIX has been wonderful in helping us join this digital world. Playfair, why now? It's time to be looking at companies like Playfair for a variety of reasons. The sector that we're in, the base metal sector, is hot and will be hot for a number of years. The project we have has got demonstrated value from past production in a country that's excellent, Norway, and the company is got a lot of experience in it, and we're looking to get to the drilling stage here on this project this summer. So your timing is about perfect in terms of looking at us. So going back to the sector, we believe that it's going to be a long-lasting base metal market, possibly for decades. And this time around, it's not only driven by China, it's driven by a broad use of applications for the greening of the planet. So opportunities like copper, nickel, and cobalt are at the forefront of this big move. As you know, the world is aware and the hunt's on. Playfair has joined this hunt in Norway. And Norway is, some of you may not know, but it was actually a historical producer dating back to the Industrial Revolution, and in fact, produced a lot of the copper for that Industrial Revolution. The Norwegian government right now is encouraging the hunt for minerals to supplement their fossil fuel industry. The fossil fuels, of course, has produced a very large endowment for the country, but now they want to diversify into the minerals. So our project is in central Norway. It's not up in the far north where things are cold and hard to get at. We're down right in the middle of good infrastructure. The area has produced over 80 million tons of copper-bearing ore over the last number of years, really. And we've acquired this piece of property based on work done originally by EMX in identifying the area and realizing that there was a large VMS district that hadn't been looked at for maybe 40 years. There's known copper nickel deposits on it. The Vaclean deposit is there. It's over roughly 400,000 tons at 1% nickel and 0.4 copper. So it's an asset that Falconbridge drilled off back in the 1970s. And there's another Borsche that was worked on by Rostevangen back in the early 1900s. That's part of the property that we're looking at. And there's a bunch of other information available. There's many geological occurrences found by the NGU. There's airborne surveys that were done by Falconbridge in the past. So a lot of information is available on the district. And the amazing thing is that we've got a whole 30 kilometers of this belt of rocks tied up in a little company like Playfair. And we know that there's been no significant exploration in this area dating back to at least the 1980s and possibly in some cases a lot earlier than that. So it's like a new area for us. So you have an old area that's been looked at for 400 years. And what gives us the right to think that we can find something that hasn't already been found? Well, for starters, this area's never been looked at with modern technology. But there is a lot of really important information that has been gathered over the years, and it's a massive information. So we took all of that information and we decided to let artificial intelligence help it. There's a system called CARDS, a computer-assisted resource detection system, and we've been aware of that for a long time. So we decided to take our 300 some odd kilometers of ground and let CARDS decide where we should at least look. So after CARDS analyzed all the information. It's a very sophisticated process, and we were happy to go over it with you if you're interested. But the cards squirted out 27 different areas to look at. But we decided we use a double filter. So in order to narrow down this area, we went from 300 square kilometers down to about 2.5 square kilometers in these 27 targets. We used a geochemistry method called MMI. It stands for Mobile Metal Ions. And we use this method to further bring us closer to drill targets. We covered all the MMI targets all the AI targets with MMI, and we ended up with 5 different areas and 7 individual targets, which we're going to follow up with drilling. And these selected drill targets we've been back on them a couple of times. We've flown MAG over them to give us a little bit more background identity. And now we're getting into the drill stage. We started last year. First drill hole drilled in this area, as far as we can tell, going back to the 1980s. This is the very first moment. You'll notice that we have a man-portable drill. The gentleman on the left there is a Canadian who is brought into the country to use the drill, and he's training people from Norway that you see on the right there to be able to operate this drill. So we're ready to go. Last year, it took us a long time to get organized, for a lot of it to do with COVID. And finally, we got drilling on September the 21st. So we had a very short season. And we just got started on the first of these 7 drill targets. This one is rhodellan, and that's one of the very first pieces of core that came out. We, in fact, found what we call an amphibolite zone down there on our MMI target, and these amphibolite zones are known to be proximal to the other deposits in the area, particularly Rostavangen and Kvikne, which were past producers. So we moved from rhodellan up to Starborn, and we got started at Starborn. The Starborn was a very high MMI anomaly, one of the highest ever recorded in the field. And we started to drill from the bottom of the hill, having the man-portable drill. It made it more sense to start at the bottom of the anomaly and work our way up, which we did. And by the time we got to the top, we realized we were drilling through the anomaly and only coming up with sediments that were not the right rock type for creating such a high MMI response. So we had some further work done by our field geologist, and he discovered a what we call a dead zone, or a zone where acid has been created that was bringing the soil. It was reacting with the soil and giving us this very high MMI anomaly. So the MMI anomaly originates in the soils, but that anomaly the soil from that originated up the hill from where we are. That last hole that you can see drilled at an angle on the left encountered a variety of rock types, including a bit of ultramafic, which is a different type than all the sediments we were in. And we believe that we're getting very close to where the soil from the anomaly originated. We did have a grab sample from farther up the hill that ran 1.25% copper, about 3% zinc, 0.2 grams of gold, and 16 grams of silver. So we're quite encouraged by this, let's say, this development. We were disappointed that the anomaly itself was sort of sent us on a wild goose chase for a bit, but we figure we're very close. We've currently laid out about 10 holes to go back and check out Starboard. And that's where we're going to start our program this year. We're hoping to get that started around May the 15th. So this year, we're just going to complete the drilling. We're going to start at Starborn, go to Rostavangen, and then Centerfjellet, and then Kletten. So these targets are spread out over this whole district. You can see on the map there the various stars that show the different areas. So these targets are potentially all of these different targets are VMS type of targets for us to follow up on. We're using what we're called scout drilling. We've been very mindful of all the environmental issues. Norway is very sensitive about the environment, so we've done everything in our power to stay within the bounds of how they like us to operate, and we're making great headway. We've got a lot of local support now that we didn't have when we first went in, and it's been a slow process, but this year is going to be a very exciting a year for us. We're going to be drilling all of these targets, and well, we just have to wait and see what the drill hole is going to tell us. The company itself, okay, first of all, we're a pretty experienced board, Greg Davidson, Neil Briggs, Don Moore. Between the three of us, we measure our experience in like about a century and a half. So all of us have seen a lot of activity over the last 30, 40 years, 50 years. And we know that this particular project is extraordinary in terms of the things we've looked at over the years. So it's a time to look at us. We've got strong shareholders. We've got over 50% of the stock held by very strong shareholders, all of which, for the most part, acquired their positions through the market and through financial support of our financings and through EMX. So we're basically a small market cap company with a really great project. I'd like to point out we don't have any warrants outstanding. So we strongly believe that this is a positive thing for the stock being able to run. And as far as the listings go, we're standard. We're on the Toronto Venture Exchange. We're over in Frankfurt. We trade OTC in the US. And I do hope that you'll take the time to make an arrangement and give me a call or arrange to have, I would say, a more in-depth meeting with me. On this happy note, I wish you all a good day and enjoy the rest of the conference. Thank you.
I'm John Black. I'm the CEO of Aldebaran Resources, and today I'm going to take you through a real brief overview of Aldebaran and our exciting Altar project. We are a TSX listed company as well as trading on the OTC in the US, so the appropriate disclaimers apply to this. At Aldebaran, we're a group that specializes in finding large copper or copper gold deposits, drilling those out, and then ideally selling those to a major. And we're on to a very exciting project at the Altar project. This is a quick shot at our share price over the last year. And you can see as we've begun to start an aggressive drill program, the market's kind of picked up some attention on this, and our share price has doubled in the last year. So you might ask, does that mean we've already made a run on this? But I think we can take a quick look at how we compare to a number of other peer projects, companies that have similar assets to this. And we'll see in the middle on this that this is a list of companies that have large copper or copper gold resources similar to we do. And we can see that the Aldebaran resource, the 80% of it that we have an option to earn into, currently hosts over 15 billion pounds of copper equivalent. So that puts us on a pretty interesting list of projects here with a nice large resource. We can see that the average grade of it on the right is about 0.5% copper, so very similar to many of the other projects that are out there. But on the far left, this is a graphic that shows the enterprise value, or basically the market cap of the company versus the amount of copper that we have in the ground. And we can see that we're currently valued at less than 1 cent US per pound of copper in the ground. So even though we've seen a nice run over the last year, we're still significantly very much undervalued compared to many of the other copper assets that are out there right now. So it's an emerging story. We've caught some interest in the market right now, but today I'd like to show you 10 reasons why this is one that's very much worth your attention and in consideration for an investment. First reason is that we're located in a very attractive jurisdiction. We're in the jurisdiction of San Juan, the province of San Juan in Argentina. It's a province that hosts a number of other exciting projects, most notably the Filo del Sol and Jose Maria projects in the northern part of the province. It's also a portion of Argentina that is very much encouraging mining at the moment. They have the opportunity to develop a major mining industry in Argentina. They're realizing that, and they're taking steps to encourage us to move our projects forward quickly and to develop those into mines. So it's an outstanding province, and it's catching the attention of many investors. Number two, Altar is a porphyry copper project, but like many porphyry copper projects, it's actually a cluster of deposits or a cluster of porphyry intrusions. The mineralization that is reported as a resource today is hosted in the Altar Central and Altar East deposits on the right-hand side of this diagram. But on the left-hand side of the diagram, we can see the exciting Radio QDM area, where QDM hosts a small gold resource, and Radio is an emerging copper gold target that's not yet categorized in the resource. So there are exciting opportunities to drill additional mineralization in the district and additional styles of mineralization. This is a cross-section looking across that same area that we just saw looking to the north, and we can see the conceptual pit that hosts Altar Central and Altar East. Between these two deposits, we currently have a measured and indicated resource of approximately 1.2 billion tons at a 0.5% copper equivalent. That's over 11 billion pounds of copper, over 3.4 million ounces of gold. And we also have an additional nearly 200 million tons of inferred resources at similar grades. And then we note on the west side at QDM Radio, all of that drilling that's indicating what we consider one of the more exciting parts of the project is new, and that's not yet reported as resource. In that area of QDM, we've also recently announced a very exciting new high-grade gold discovery. So a drill hole that's being drilled to test for that deeper copper gold mineralization, drilling beneath a shallow gold resource that we have on the surface, recently intersected a very interesting high-grade hit. It was where we reported 14.5 meters of over 19 grams of gold. We believe this is a feeder zone for gold mineralization that's reporting in the more average grade material that's in the small open pit on the surface. And this opens up this target as a new interesting target, but it's one of many targets. So it's a gold target buried within a much larger copper gold project overall. Very typical of big districts like this, where you can see multiple styles of mineralization in the same district. This looks more closely at the shallow pit that hosts a little over 500,000 ounces of gold in the QDM gold zone. This is gold only. It's above the copper gold mineralization at depth. And we can see that drill hole 45 on the right-hand side of this diagram was drilling to test that copper gold mineralization at depth. It's still an active hole right now testing that. And on the way, we hit this very nice higher grade gold mineralization that looks like it could be a feeder zone for that upper QDM gold zone. So a nice project to find within a much larger project that's a copper gold project. This is a different look at the QDM radio. So we just saw the pit, and we can see the pit again on the right-hand side of the diagram that constrains that approximately 500,000 ounce gold deposit on the surface at QDM. That overlies the deeper copper gold mineralization that forms the radio deposit. This is an emerging deposit. We have no reported resource. We did not have enough drilling on this project at the time we updated the resource last year, but we've hit some of our best grades on this, particularly when we see copper equivalent grades of greater than 1%. These are the type holes that attract our attention. Our recently hole 42 returned over 100 meters of 1.4% copper equivalent. So very exciting, but exciting new discovery. We're focusing much of our drilling right now. We have 4 drill rigs turning on the project. 3 of them are drilling on the radio discovery zone and trying to delineate this to see if we can get enough drilling to report a new resource by the end of this year. We've reported the first hole of the season. This was reported 2 weeks ago, QDM 43, where we had a very significant step out to the southeast from the known mineralization, step out of over 200 meters from the nearest hole on section, where we reported an interval of over 700 meters at 0.5, our average grade for copper, with higher grade intervals within that. So very significant step out. It's increasing the volume of the system, and we'll continue to drill on this with 3 drill rigs throughout most of this season to determine what the full size and character of this deposit is as we go forward. So this kind of shows some of the higher grade zones that we have within that. Reason 7 to take a look at this is we're not just about the known mineralization we have or even the emerging radio QDM zones that we have right now. There are additional targets that our geologists have put together on this. Kevin Heather, our Chief Geologic Officer, has put together a series of excellent videos that describe the philosophy we have on the types of data we collect in a large district like this, why we collect those, and what they've done to help us identify additional targets. We've talked about QDM radio. I've indicated that there are potential extensions to the known mineralization at central and east, particularly at depth with potential for higher grade. But there are also additional new targets that have never been drill tested at all that offer the potential to add yet additional porphyry centers. And we'll soon be testing some of those. Point number 8 on why you should consider Aldebaran as an attractive investment in this period of time when we're seeing copper emerge as such an attractive investment opportunity is that we have a management team with a successful track record. Aldebaran is actually the 3rd company under our same management team, and all 3 of these companies, our philosophy is to identify large copper or copper gold deposits, to capture those when the market's low or when we spot a circumstance that allows us to put our hands on it, to drill those out, show the full potential of deposits, to de-risk those through a PEA or approximately pre-feasibility stage, and then ideally sell those to a major company. Our first company was called Antares Minerals, and we had the good fortune to discover the Hikira project in southern Peru, which we went through this process and sold that to First Quantum for $650 million. From that, we spun out Regulus, which has a very exciting copper gold project in northern Peru, and Aldebaran, which is on the Altar project, which we've talked about today. Point number 9 is we have very significant financial support. Because of the structure of how we captured this opportunity, we have 2 large shareholders. Sibanye-Stillwater, which is the company that we're earning up to an 80% interest in the project from, has a 19.9% interest in the project. And a fund out of San Francisco called Route 1, which has been a long-term backer for us in our endeavors in our previous companies, owns just short of 50% of the company. They're very supportive shareholders that have given every indication that they will provide financing for us to move forward on the project. So we're in a pretty good position at the points in time when we need to put additional cash into the project to keep it going. And then point number 10, which is probably the most important point right now, is we have a very aggressive drill program underway. For the first time, we have 4 drill rigs on the project. And due to some new road construction by our neighbors, Glencore at Pachone and ourselves providing a new cutoff road into the project, we've extended the field season from typically 4 months to more like 8 months right now. So we'll have a much longer field season. We'll have 4 drill rigs drilling, or they're underway right now, and will continue to drill through at least May, if not longer this year, which means an increased news flow and a lot more information coming out of the project. That's partly why we've seen an improved share price over the last year, but we've only begun to start to see the drill results. So we will see a lot more information coming out over the course of the next few months and the next years, frankly. So just as an investment recap, we have an aggressive drill program underway. For the first time, a lot of news flow coming out of this project. We're testing some very exciting high-grade targets that already have good drill indication that there's something there, as well as new potential targets. We're in a very high-profile location. Argentina is probably, in the San Juan province, is probably one of the hot spots for porphyry copper exploration worldwide right now. And it's also a country that's embracing mining and encouraging us to do our exploration work and deliver the potential for new mines to contribute to the economic vitality of the country. They realize that importance right now. They're trying to, as a country, move to a lower carbon footprint and increased renewable energy sources. And they realize copper and lithium and other forward-looking metals like that are critical to that. And then finally, we have a very compelling valuation. There are a lot of good projects out there, including in San Juan province, where we're at right now, but many have a pretty reasonable value already assigned to them. This is an earlier stage project. It's just catching on right now. So I think it's well worth a look at it now to see if there's a good entry point to come in to capture some of the value that we anticipate we'll be adding over the next year and a half. So thank you very much for your time. Look forward to any questions you might have. You can always contact us via our website, and there's a lot of information, including some pretty interesting videos that Kevin Heather, our Chief Geological Officer, has put together to describe the project in more detail. Thank you very much.
So at a high level, what are we looking at here with Cerro Blanco? We have a very unique asset located in southern Guatemala. We recently pivoted just over a year ago to a new development concept for this asset, where it was previously contemplated as an underground development scenario. However, with the success that we had in drilling and our interpretation of this deposit, we're now looking at a much larger project, larger scale operation, with about 3.1 million ounces of gold and over 10 million ounces of silver in the resource. This asset is now capable of producing over 300,000 ounces of gold per year and over 1 million ounces of silver per year at an all-in sustaining cost in the first quartile of the industry. So very robust numbers on this Cerro Blanco project, and that's why we're so excited to move it forward. However, before getting into the results on the specifics of this project, it's really important for us as representatives of this company, Canadian-based junior gold developer, that our commitment with Bluestone Resources is to Guatemala. We look for opportunities in the country, and we focus on responsible resource development and creating shared benefits to the people of Guatemala. And we do that through training, education, and capacity building with our partners, the Lundin Foundation, to ensure that everything that we do in Guatemala is with consultation with the people in country to ensure that we're maximizing the opportunities in the area of influence where the project is located. A couple highlight numbers: we're going to have direct employment of over 1,100 people during the construction phase, and that will balance out at around 500 people during the operations phase once we're producing. And now if you look at the right-hand area of this slide, you'll see that there's about $300 million US in economic contributions through taxes and royalties over the life of the project. So this will be a significant economic contributor to Guatemala, and we're very excited and proud to be advancing this project in partnership with the host nation. About average annually, 160 million contributions in terms of in terms of energy, labor, materials, supplies. Those are direct contributions that equal about 1.8 billion US dollars over the life of the project. So again, very, very meaningful impact. We have a very strong focus on doing this project in a sustainable manner, and we believe that we've got the right people in place to train, educate, employ, and build capacity in Guatemala. So now to the highlights of the feasibility study. I'll walk you through these key numbers here, starting on the left-hand side. The initial CapEx that we're contemplating on this project is around 570 million US dollars. at an all-in sustaining cost of $630 an ounce. I'll get into the details of those numbers in later slides. But the life of mine capex, so when you include sustaining capital and $40 million of closure costs, is around $750 million US dollars. Now in the center of the slide here, what you can see is our average head grade in the first 10 years of production will be about 2 grams per ton, which makes this a very high grade open pit project. The peak production, which you'll see later, is close to 350,000 ounces of gold per year. And over the life of this project, we are contemplating a resource or a reserve life recoverable of about 2.6 million ounces of gold. To the right here, you can see the economic returns. So 1 billion US and after-tax NPV at a 5% discount. That translates to a 30% IRR and a rapid payback of about 2.2 years. So some of you may be familiar with the project and the story. About 1 year ago, we announced a preliminary economic assessment, so a less detailed study that showed the capex of this project around 550 million, which you can see on the left-hand side of this bar chart here. So I think it's important for those that have followed the story to understand how we get from 550 million US to now about 570 million US through our detailed and advanced studies and optimization work that we did over the past year. So the biggest savings that we noticed here that we were able to achieve was really a feat of our mining engineering team, able to optimize the pit and therefore justify reducing the size of the processing facility by 20%. In doing that, we saved about 20 million US dollars. But there were obviously offsets. Over the past year, we've seen a lot of inflation, we've seen supply chains disrupted, and we've seen material pricing and energy costs going up. So we've noticed those in our water treatment area, as well as advanced engineering work that makes sure we have the most robust water and infrastructure systems in place to make sure that we're sustainably building and operating this operation. So you can see water treatment, infrastructure, and freight and inflation have all increased across the board. However, there has been additional savings in areas such as construction indirects, so engineers that we can supplement with a Guatemalan workforce rather than expat loading. And contingency has also gone down because with the more detailed engineering, we have more certainty on the cost of this project. Our owner cost has increased because we have now implemented a camp where we will have our expats living at the project site, calling it their home during the construction and operations, which allows for us to have a more efficient and safer operation. So all in all, we've walked from 550 million to 570 million for the initial capex number. Additionally, the ramp-up period is about 5 months as compared to the PEA, which was contemplated at 2 months. Now touching on the operating cost. So we've got 2 pie charts here, and I'll start on the left-hand side of this slide, and you can see our operating cost on $1 per ton milled. So walking through some of these numbers, our G&A of about $3.40 per ton. So these are all the general service departments, health and safety, environment, human resources, security, all of those departments that are working to support the mining and processing operation comes in at around $3.40 per ton. Mining, you look at these 2 numbers here, $10.40 per ton milled. However, that's just pure milling cost. So normally what we do is we look at mining at $1 per ton mined, and that's less because we're moving more material from the pit than we're actually producing. So that's at about $2.50 per ton. Processing, so this includes everything to manage the processing complex as well as the filter plant. We have a dry stack tailings impoundment concept here, so we will not be employing a traditional tailings dam. We are minimizing our footprint and managing our water in a more sustainable manner, and therefore we will be using a dry stack tailings rather than traditional tailings, aqueous tailings impoundment. And so that's about $13 per ton. And then lastly, site services. So this is the camp, catering, and about half of that $3 or $2.70 is associated to our robust water management plan and our water management strategy. So about $1.50 per ton is associated to dewatering and water treatment. Over on the right, you can see the all-in sustaining cost buildup. So I won't spend too much time here, but what you can see is very competitive pricing due to the high-grade nature of this deposit. And therefore, we're looking at a first quartile in our industry all-in sustaining cost of about $630 an ounce of gold payable. So, very, very attractive, low-cost operations here on this project. A little bit on our mining and processing. So this is a conventional open pit mining project that we are contemplating here at Cerro Blanco. Truck and shovel utilizing 90-ton haul trucks. We were able to optimize the pit design and increase the size of our haul trucks, going from 60 tons to 90 tons. That means we've been able to increase our mining rate, and therefore that's how we were able to justify reducing the size of the processing facility by 20% and increasing our mining rate. So very good job done by the mining engineers in our team to optimize this pit design, and we'll continue to work to optimize this. But we're really pleased with how the plant is looking, and it's a traditional processing facility with crush, grind, leach, and CIP tanks to produce 100% doré bars. So no concentrate will be produced. Key statistics here, it is a 14-year mine life, 10 years of mining, but 14 years of mill feed. Total material to be moved is about 200 million tons. Ore to be processed is about 54 million tons. And then the rest of these numbers here you can look at on our website. But really, I think the big indicator here, the success that we also had with our metallurgical program, where you can see gold recoveries are at about 93%. So very high recoveries, which means that we're utilizing this ore and making sure that we can maximize the gold to be produced and silver out of this deposit. So here's a picture of the block model in situ and the open pit design around it. What you can see is that this is a tightly held deposit, so high grade in nature, and therefore the resource is contained in a small space. The final dimensions of the pit will be about 1,100 meters north to south and 600 meters east to west. You can also see a small satellite pit to the northeast in this picture that shows other potential opportunities for high-grade, shallow feeder pits to continue feeding the mill longer than a 14-year mine life. And that's a big opportunity for us to extend this project and keep the mine life longer than 14 years. So this is a 3D rendering of our processing facility, and I'll walk you through the flow sheet, starting from the jaw crusher to the top right of this slide here. And then it goes to our coarse ore stockpile before being fed into the grinding building, where we have a SAG and ball mill that will then grind the material down to a finite size. And then it goes into the leaching and CIP area to extract the gold material, and then into the gold room to produce 100% doré bars. So this is a simple flow sheet, very tight as well. It's from an operability standpoint, it's going to be a really nice plant to operate. And at the end here, what you can see, which is different to most conventional processing facilities, is that we have a filtration plant to dehydrate the tails and ensure that the water is being recycled through back into the operation. So very robust, innovative solutions here being used at this mineral processing complex. And that puts us at the forefront in terms of innovative and technological advancements on this project. So I don't want to get too technical, but I think it's really important for everybody to understand that our commitment to operational and excellence and our performance from a water management and tailings management standpoint is of utmost importance. And so we do have a sophisticated dewatering and water treatment system designed, and also our tailings, as I mentioned, a dry stack tailings rather than a conventional aqueous tails concept, will really put us in the forefront of responsible mining practices being adopted for the future of sustainable mining globally. And that's a focus for us with Bluestone Resources and, of course, with the Lundin Group as we continue to move projects forward in frontier regions. So here's a slide that shows really and demonstrates the robustness of this project. This shows the production over the life of the mine. And there's some key highlight numbers here on the top. So walking you through from the left to the right, we can see average annual production over these 10 years of mining is about 240,000 ounces of gold per year. at a $1,600 an ounce gold price, we're going to be generating close to $230 million US per year in free cash flow. And I've already talked about our low operating costs, but that's really the key to making this such a robust project. You can see on this bar chart here our production profile. So we do get into the high grade zone early. Therefore, we're able to have our peak years in 1, 2, 3, and 4, and therefore really generate a rapid payback for this project, which gives us the opportunity to use those funds to continue to improve our asset or look for other opportunities in the region. You can also see here per year our all-in sustaining cost assumptions or our all-in sustaining cost results. And you can see during those peak years, we're actually moving into the first decile in terms of operating costs. So very exciting, very attractive numbers, and we're very proud of what this project can generate. So this slide here shows how we're leveraged to the gold price. We ran our economics at about $1,600 an ounce gold and $20 an ounce silver. But what you can see, where gold price is today, over $1,900 an ounce, if you add that, if you put those metrics into our economic model, you can see that we're generating very significant returns. And of course, the payback period is even quicker. Our NPV goes from about 1 billion up to 1.7 billion at $2,000 an ounce, which doesn't seem out of the question given the global economy and where things are heading in the world today. So we are very bullish on the gold price, and we believe that this project stacks up very well amongst our peers. And even in a low price environment, it's still a very robust project. This slide shows how we stack up against some of our peers. So what this shows is that Cerro Blanco is one of the highest grade open pit development projects, capable of producing over 300,000 ounces of gold a year at first quartile operating costs. And you can see that on this chart here. The y-axis is showing the all-in sustaining cost, and the x-axis is showing the head grade. So you can see that we do stand out amongst our peers because of the deposit, the richness of it, the near surface nature, and the geometry of the deposit. It's very amenable to surface mining methods, and therefore you can see that when you compare the underground feasibility study for Cerro Blanco that was released in 2019 to the feasibility study for the open pit that was just released on Tuesday this week. So where do we go from here? Some near-term catalysts for us. We will have a lot of exciting news to be able to present to the market this year as compared to last year, where we were really focusing on understanding the project, improving our community engagement, and really focusing in on de-risking the project. Whereas now we've got some key activities that will be kicking off in the year, starting with the construction of a new bridge that will bring 7 villages plus the Cerro Blanco project to the town of Asunción Mita. That is a town of about 16,000 people. So that bridge construction, we are permitted. We are waiting for our construction license, and that's able to kick off as soon as March in this year. Project engineering as well. We're moving into the detailed engineering phase now, and we're proud to be working with G Mining Services again. We worked with them at Fruta del Norte on the Lundin Gold project down in southern Ecuador. So we're looking to replicate that success here through project engineering and construction. And then, of course, our permit process. We did have to submit an amendment to our existing environmental license. We submitted that application in November of 2021, so just several months ago. And we are working with the authorities to ensure that we have an efficient review and clarification period. And we anticipate that we'll be able to receive our permit approvals to keep moving the project forward in Q4 of this year. And that puts us in a position to start the pre-development or early works campaign towards the end of this year, and in 2023 getting into full construction mobilization. So very busy on the work front. A lot of activities are already kicked off and some new ones to be initiated this year. And of course, everything in parallel is focused for us to be able to get our project financing. So we have a financing strategy in place for the Cerro Blanco project. We're contemplating traditional debt facility, potentially a silver stream on our silver production, because we do have meaningful silver resources that will be produced here. And then, of course, any equity overhang that will be needed to keep the project moving forward. One exciting fact, though, is that this is a Lundin Group company, and therefore my family is committed to advancing this project and minimizing shareholder dilution. So we do have a line of credit open to bridge any funding gaps that may arise. We've got about $15 million in the bank today, so we are comfortably funded to get through the next several months. Before I go to the Q&A section, a very unique opportunity for us as well at Cerro Blanco, or in the Cerro Blanco region, is with our Mite geothermal project. So we are licensed to generate up to 50 megawatts of renewable energy through our geothermal plant. This is a project that we will look to advance once we're in the construction phase. And really what this does is it provides us the opportunity to offset some of the power requirements that we will be taking from the national grid, and also to generate renewable energy that we could sell into the privatized grid in Guatemala. And I think that for us is a very unique opportunity, because we are so focused on sustainable development and minimizing our environmental impact, that having a gold project adjacent to a geothermal project really does provide a unique opportunity for us at Bluestone Resources with our Cerro Blanco project. We are in a hot springs environment, so this area is very amenable to offering potential opportunities to produce renewable energy.
Thank you for tuning in today. My name is Sam Ash. I'm the CEO of Bunker Hill Mining. I'm with Dave Wiens, our Chief Financial Officer, and we're excited to run you through and introduce you to the company and our project here at the Bunker Hill Mine in northern Idaho. I want to start by talking about the kind of company that we're looking to build here. We're looking to build a mine that creates value through regeneration. And we are looking at Bunker Hill as the cornerstone asset of a multi-asset mining portfolio in North America. And we're doing that in a very interesting and unique way. We're focusing on the regeneration of fantastic world-class mineral endowments that have a history not only of significant economic value, but also areas of the Western United States that need regeneration and redevelopment through a variety of areas, including social redevelopment, but also, and importantly at Bunker Hill, environmental redevelopment as well. And I want to take a moment just to introduce the team. Richard Williams, our executive chairman, is a former chief operating officer at Barrick Gold. Myself, as the CEO, I was also with Barrick Gold. Most recently running all of the Lumwana copper assets in Zambia. I'm joined with David Wiens, who I will let introduce himself, and Brad Barnett, the Vice President of Sustainability, who was the former head of global closure for Barrick, which importantly exposed him to a lot of regulatory and environmental challenges and ecosystem here in the Western United States. So, as you can see, we're definitely an operations-focused team, and that's what we're doing here at Bunker Hill. This is an operational restart of a historic mine with a phenomenal mineral endowment, and we are looking to do that in a very progressive and forward-looking way at the forefront of environmental performance and social performance as well. I'm going to turn it over to Dave now to just introduce the company in terms of the market and the capital structure. Dave?
Thanks, Sam. So you can see on the right-hand side a little bit of an overview of our shareholder base as well as our market profile. We're a $40 to $45 million market cap company listed on the CSE in Canada, which is where most of our trading is. We would certainly expect over the next few months to upgrade to the TSX Venture. That's in process. For now, our primary listings on the CSE. We also trade under symbol BHLL on the OTCQB in the US. You can see our shareholder base, about 75% institutional and high net worth, comprised of a lot of long-term supportive institutional shareholders, a lot of which came in with the new team when they joined less than 2 years ago. You can see management and insiders hold about 7%. We certainly put our money where our mouth is, and very pleased with the shareholder base to build this company.
I'll give a brief history of the Bunker Hill mine. The mining started at Bunker Hill in the late 1800s and was mined continuously for over 100 years. Over that period of time, 165 million ounces of silver produced, as well as 5 million tons of base metal in the form of lead and zinc. That 100-year operating life was done with somewhat lax environmental regulation. And in the early 80s, because of poor environmental performance, the mine was put into closure. The EPA, the Environmental Protection Agency, stepped in, and for the last 40 years has been executing a cleanup under the guise of Superfund. An important milestone in 2017, there was a consent decree reached that settled all historic environmental liability. That's important because at Bunker Hill, there is no historic environmental liability. That really paved the way for this management team to come in and advance the project. We did that starting in April of 2020. We came in and we focused on three key areas. One, advancing the project from a technical foundation, conducting 3 drill campaigns, publishing 3 43-101 compliant mineral resource estimates, and 2 subsequent PEAs outlining a pathway towards a rapid restart and resumption of operations here at Bunker Hill. The other area was focusing on the company and the corporate governance, advancing and bringing the organization back to life, which was essentially a dormant organization when we joined. And the third leg was really working hand in hand with the EPA and the Idaho Department of Environmental Quality to revise and reach a modified settlement agreement, which we were able to achieve right at the end of last year. That, coupled with a $50 million non-equity financing, enabled the purchase of the Bunker Hill mine, and it was really set the stage for the next stage of the company, which is the moving towards construction and putting the mine back into production. A little bit about the resource. We have a mineral inventory that includes 6.6 million tons of measured and indicated material. Now it is zinc dominant at the moment, but historically it was much more silver and lead dominant, with a fairly balanced revenue stream of 50% coming from silver and 50% coming from the base metal component. We do also carry 6.7 million tons in the inferred category, and we expect that this will convert at a really quite a high rate, because it was a reserve that was being actively mined when the mine went into closure in 1980. So we see a very high conversion rate as we move forward of that inferred material into the measured and indicated category. The mine is comprised of just over 400 patented mining claims, which cover over 5,800 acres. That's key because in the Western United States, on patented mining claims on private ground, it puts you under the state regulatory authority as opposed to the federal regulatory authority. And the Idaho Regulatory Authority is very supportive of mining, and it certainly simplifies our path towards restart. A little bit about the metal profile. It's 78% is comprised of the zinc and silver component here at Bunker Hill, and that places us ideally for the low carbon energy transition that the world is going through. The cobalt and lithium, they get a lot of time in the press, but underlying that is all of the demand that is being built from across the full metal suite, and zinc certainly plays a dominant role in that. When you're looking at galvanization, when you're looking for its use in supporting wind power, and also on battery storage and electric. Silver, the same way, it is a nice nexus point between the industrial demand and its more traditional use as a store of value as a precious metal. So our PEA outlines a operation that will generate 143 million NPV with solid returns, a fairly modest capex, which is a reflection of the amount of existing in-place infrastructure that we have to work with, in particular the access that we have to the mineralization in the underground mine. 11-year mine life, well positioned in the bottom quartile of the cost curve, generating around $25 million a year in free cash flow at relatively conservative metal prices, with what we see is the true value of Bunker Hill, which is the exploration potential and upside, both at depth, but also in relation to rebalancing the mineralization to be more silver dominant over time. About a month ago now, we also executed a MOU for the purchase of a processing solution. This is a key de-risking event for us, as it provides clarity and certainty around the largest single capital expenditure that will be required to restart the Bunker Hill mine. The Pend Oreille mill, it's a 2,000 ton a day differential flotation plant in the configuration where it was. At Bunker Hill, we will transition that into a 1,500 ton a day differential flotation plant, making a zinc concentrate and a silver enriched lead concentrate. There are 2 locations that are technically feasible to locate that plant here at Bunker Hill. One in the underground environment, and the other one, as you can see on the picture in the left, in this large existing facility that is on surface here at Bunker Hill. You can see that it's immediately adjacent to the administration building, and that's where Dave and I are talking to you from today. Our development plan moving forward has us completing a pre-feasibility study towards the end of Q1, early Q2. The mill demobilization and the moving the mill from Pend Oreille to Bunker Hill will initiate in the middle of Q2. Final detailed engineering is underway and will continue through the middle of Q3 into early Q4. Underground development and rehab has been initiated here at Bunker Hill. And the process plant construction here at site is expected to begin mid-year, lasting about 12 months, which puts us into mill commissioning and restart towards the end of 2023 through the Q3 and Q4 period. I'm going to turn it over to Dave now, just to give you a little bit more insight into that $50 million non-equity financing package that we've secured.
Thanks, Sam. And I'd encourage viewers, if you wanted to look at one press release from Bunker Hill, I would encourage the December 20th of 2021 news release, which announced this $50 million package, along with the EPA deal and the mine purchase, because really that was the transformative moment that we worked all of last year to achieve, and that really allows us to achieve liftoff here, as Sam just described on that development timeline. So you can see, to get into a bit of the detail, $50 million project finance package that we secured through Sprott. This is Sprott Resource and Streaming, a relatively new arm of Sprott. And you can see that this was in 3 separate instruments. The first 2 of those have closed. The third one is to come in the next couple of months, but comprised of, number 1, a royalty of 1.85%, gross revenue for $8 million. What that allowed us to do, as you can see there, is purchase the mine, pay the first payment on the EPA schedule. The next payments aren't due until 2024 out of free cash flow, and working capital. Most of that went to pay an initial deposit on the mill. That was the beginning of January. A few weeks ago, at the end of January, we closed the second tranche, which was the convertible debenture. You can see it was actually upsized to $6 million. And really that allows us to continue moving the project forward through pre-feasibility study, engineering studies, and covering other working capital needs until the stream comes in. You can see the stream, as the name suggests, is a multi-metal stream of 10% of all payable metals, up to 10%. It's a range of 27 to 37 million. If we draw the full $37 million, it'll be a 10% stream on all zinc, lead, and silver produced at the mine, stepping down to 2% after a certain quantity is met. And we have the ability to buy back 50% of that stream, which is an excellent feature and effectively allows part of the stream to be considered bridge finance. So we are in the process of working towards drawing that final tranche now, fulfilling any additional capital needs, including $15 million potentially of additional indebtedness that we're permitted to have under the package. So we're quite pleased with the outcome and what it allows us to do. If we go to this page quickly, I mean, really, this is the value proposition all on one page for investors. You can see our market cap there, $41 million, relative to the value of the Bunker Hill mine. So on the left-hand side, you see the first PEA that we published in April of 2021. That was $101 million. We since upgraded that to the second PEA, which Sam went through a couple of slides earlier, of $143 million, 11-year mine life, $25 million of free cash flow. Those are both at very conservative metal prices. You can see in the fine print there. But just to highlight, in particular, the zinc price is about 50 cents a pound, about $1.65 today, relative to the price that we used in the PEAs of $1.15. And you can see the very significant upside leverage that we have to that metal price of over $170 million. That doesn't include any of the high-grade silver exploration at depth, increases in the resource, further optimization of the mine plan, and mine life extension. Certainly, we expect this asset to go for multi-decade, not just the 11 years here. So lots of upside, and even just on the base numbers that you see on the page here, this is a significant bargain relative to the value.
I want to switch gears and just talk a little bit about that upside potential that we see in the mine. And it's really in three key areas. This first one is at depth. So when you look at Bunker Hill in comparison to a lot of the mining operations in the Silver Valley, we're relatively shallow. Bunker Hill was the largest mine by quantity of ore extracted, over 42 million tons. But it was the shallowest of all the major mines in the Silver Valley. As you can see, the Lucky Friday, currently in operation, is down around 9,000 feet. And the Corgalina complex, the other operating mine in the Silver Valley, is down just around 6,000 feet. So we have a tremendous opportunity at depth here at Bunker Hill, and we would expect that to be more silver dominant in nature. So it's definitely an area of focus for us, and it's an opportunity that the restart of Bunker Hill enables because of the subsequent dewatering and rehabilitation effort that will unlock the ability to advance this exploration opportunity. The second one is really the larger Bunker Hill claim package. So on this slide, you can see in purple, that's the existing mine footprint. The teal represents the entire claim block that is associated with Bunker Hill. And you can see the hashed area where we conducted one of the first ever 3D IP geophysical surveys this last summer. Now that came back with two very strong anomalies, and we are in the process now of putting plans together to move forward and test that further with drilling in the coming season. That has the opportunity to be a significant upside, depending, of course, on the drill results, but we're really quite excited about it. It's in the right geology, it has the right orientation, and it certainly has a strong geophysical response that one would expect from strong mineralization. And then the third area is the joint venture that we've entered into in the London Mining District in Colorado. And this is really our first step towards building that pipeline of growth and moving to be a multi-asset producer. So the London Mining District, it's a historic mining district, 650,000 ounces of gold produced historically pre-World War II. The current owner, Minewater, was able to acquire and consolidate the land package by coming in and solving a water quality issue with mine effluent. They've done that. Subsequently, they've monetized that water resource, and we're looking for an opportunity to move forward and unlock the mineral potential that's associated with the site. So it's a perfect opportunity and partnership for us to come in and look at what is a very prospective mineral opportunity in Colorado. And with an investment of $3 million in exploration over a 4-year period, we will earn a 50% ownership in the new London Mining District. So a very cost-effective and opportune way to begin to build that growth pipeline and portfolio. And we'll finish up with just talking about a little bit, looking back over the last almost 2 years and what we've been able to accomplish, and then looking forward, what one can expect to see out of Bunker Hill and the team here in the coming year. So we came into what was essentially a dormant company in April of 2020. And we really rolled our sleeves up and got to work. We conducted 3 drill campaigns. We published 3 progressively improved resources, 2 PEAs that show continuing unlocking of value. And most importantly, we achieved 3 critical milestones. The amended EPA settlement agreement, a $50 million non-equity financing package, and the purchase and the acquisition of the Bunker Hill mine. So we're a completely different company than we were even 3 months ago. We own what we see as a phenomenal mineral asset here in northern Idaho, poised to be advancing towards restart. We've de-risked this operation significantly from a cost perspective with the acquisition of the Pend Oreille mill, and we're beginning to move forward, grow the organization, and move towards restart. So in the next year, you're going to see us, publish a pre-feasibility study at the end of Q1, early Q2, and then we're really going to be fully focused on this Bunker Hill restart. We're looking to award EPCM contracts, finish the detailed engineering, make that construction decision on the back of that pre-feasibility, and all of that will be enabled by the closure of the $37 million stream. And in parallel to that, we still have an eye towards the future and growth and exploration with exploration activity both here at Bunker Hill and potentially at London joint venture. Right now, we're consolidating all of the historic geologic information to make sure that we move forward in a very technically sound manner, as we've done here at Bunker Hill. And so really to close out, Bunker Hill represents a tremendous opportunity for value and value creation. We are sitting here at a mine that has a clear path towards operational restart and a clear path now towards a generation of $25 million a year of free cash flow for a significant mine life with significant opportunity both for resource expansion and a transition to a more silver dominant resource over time. So it's a great time to take a look at Bunker Hill. We've achieved a tremendous amount over the last 2 years, and that's really just the start. Our growth trajectory is really going to accelerate from this point forward. Thank you very much.
Thank you.
Hello, and thanks for joining. My name is Claudia Tornquist. I'm the president and CEO of Kodiak Copper. Kodiak is a copper porphyry exploration company focused on North America. We made a discovery at our MPD project in southern British Columbia, which was a real game changer for the company. That was just about 18 months ago. Since then, we have drilled 22,000 meters, large drill program, and have successfully expanded on our initial discovery. And we have for 2022 a lot more drilling plans, so very exciting year coming up with lots of discovery potential. Please keep in mind that I will be making forward-looking statements in this presentation, and before making investment decisions, consult the relevant guidance on our website. A couple of words about the people behind the company first. Chris Taylor is the founder and chairman of Kodiak. Many of you will know Chris from our sister company, Great Bear, a great discovery success in the gold space. And Great Bear was just taken over for $1.8 billion. So fantastic success for Chris. And what Chris brought to Great Bear is very much what he's bringing to Kodiak. He is a very smart, out-of-the-box thinking geologist, and in Great Bear's case, took a project that many people looked at, couldn't see anything in it, and tried a different approach, and the rest is history. Kodiak is very much a similar story. Our MPD project also historically explored, nobody could figure it out. We took a new approach and made a discovery. So Chris, very important part of our success. He very much leads our technical work. Myself, my background is more the business side. I'm an engineer by training and an MBA, and worked for many years for Rio Tinto, mostly in roles such as business evaluation, business development, M&A. So I'm covering more the business side of things. And then lastly, I should mention John Robbins, whom many of you will know, I am sure. He is a mining entrepreneur with a fantastic track record of creating value for shareholders. And John has put together the Discovery Group, which Kodiak is part of. And Discovery is a fantastic group of people and companies that gives us great access to whether it's technical expertise, contacts, deal flow, connections, capital markets expertise. So I'm feel very fortunate to be part of a strong group. I really believe it makes Kodiak a stronger and more resilient company. So that sums up sort of the corporate background to Kodiak. And I'd like to speak a little bit more about our MPD project, where we made a discovery 18 months ago. This map shows where MPD is located. We are in southern British Columbia in a very established mining area between two large copper mines, Copper Mountain and Highland Valley. And it's a great advantage to be in an established mining region. We have fantastic infrastructure and just everything you need for an exploration project at our fingertips, whether that's workforce, whether that's services, supplies, everything. And of course, looking into the future, that will also be a big difference maker for the eventual economics of a future mine. So very happy where we are located. It's a great place to work. As I mentioned, we made a discovery, and this cross-section shows our discovery hole. It's the hole number 4 here in the middle. It was an overall intercept of over half a kilometer, so 535 meters of 0.77% copper equivalent. And just to put that into perspective, that's 2 or 3 times the grade of what's mined at the neighboring mines. So fantastic high-grade zone at the what it's called gate zone now. And this hole created a large amount of excitement. We saw a big jump in our share price. Teck became an investor. Teck invested $8 million in the private placement at the time and took 9.9% of our share capital. That, again, was very much appreciated by the market because obviously Teck investing at an early stage shows that they believe that this project has the potential to be big. Teck is a big company. They're not interested in small projects. So it was a great seal of approval, and they are a fantastic partner to have in the boat. Since then, we have drilled all over last year, in total almost 22,000 meters, and we were very successful expanding the gate zone. You see on these 2 maps the before and after. On the left, that's where we started at the beginning of last year, just off our discovery. We had drilled approximately 125 meters north-south of strike of high-grade mineralization with the discovery hole and a couple of more holes that we squeezed in 2020. And here on the right, you see where we are with our results from the 2021 drilling to date. There's still more results coming. We have so far drilled high-grade mineralization over almost a kilometer, 950 meters in strike length, down to a depth of about 850 meters and across 350 meters. So we are starting to see some real nice size at the gate zone, size comparable already to some smaller porphyry mines in British Columbia. And of course, you have to keep in mind that this is after only 1 year of drilling in a large porphyry system, so lots more to come. This map shows some recent new geophysical data, and I'd like to highlight with this the targets for our drilling going forward, how we extend the gate zone. You can see on the in these shaded areas with a black outline where we have drilled high-grade mineralization at the gate zone so far. And the red, pink, orange areas on this map are conductivity highs that correspond with high-grade mineralization. So as you can see, we've drilled in this upper part of this curved anomaly and in the lower part here. And we will this year work our way along this anomaly as it curves around and drill the gate zone further. We are also seeing now with this new data that the conductivity and chargeability anomaly extends further to the north across the prime area and beyond, and also to the southwest. So all of those areas are high priority drill targets that we will test this year. So a lot of potential to still extend the gate zone much further to what we have now. But what's the most exciting that came out of this new geophysical data, in my view, is that we are seeing an entirely new drill target. That's the second pink area that curves around and is approximately 600 meters to the southeast of the gate zone. This is an entirely new drill target. We weren't aware of this anomaly before. And of course, that's also a very high priority drill target. And if we are successful and hit high-grade mineralization there, that would be an entirely new discovery. So very exciting to drill this geophysical anomaly near the gate zone. Now, this is the gate zone area so far, but what's important to keep in mind is that we are with the gate zone only in one small corner of our property. You can see the yellow star on the map at the top left, and we have several other target areas on our property, for example, Man and Dillard, which are about 2 kilometers from the gate zone, and then also in the southern area of our property, in the X area, further targets. All of those are historically drilled porphyry targets with copper and gold mineralization near surface, drill proven, just like we had at the gate zone. And no deeper drilling was ever done on either of these target areas. So it's very much an analog to what we have at gate. And this black image, 3D image at the bottom, illustrates what we will be doing at these targets. We see on the left the gate zone. This orange dotted line is a indication of the depth of the historic drilling on the property, the historic drilling since the 60s by previous operators. And when we got the property, we had at gate only a couple of shallow holes above this orange dotted line. We drilled deeper, and that's where we made the discovery. And we have at Man or Dillard, very much the same situation down in the Axe part of our property. Again, the same situation. Lots of shallow drilling with lots of copper and gold over large areas near surface, but no deeper drilling. And so we will take the model that was very successful at gate and replicate this approach at these other targets, drill deeper holes. And that's, of course, very exciting. We'll see what we can drill there. And again, this has the potential, or this is the potential for another big step forward for the project and a discovery, exciting discovery, just like the gate zone was. So lots on the cards this year for Kodiak. We still have results coming from our 2021 drill program. We should have the next batch of results in the next couple of weeks, and then lots more exploration results all through the year. So last but not least, our capital structure. A couple of points to highlight. We are a tightly held company, less than 50 million shares outstanding, and we are well funded, $9 million in our treasury currently. that is sufficient to do our work this year. We could stretch this all the way to the year end if we so chose, so are under no pressure to finance, which is of course a great situation to be in. In terms of largest shareholders, Tech is our largest single shareholders, and management and insiders are just under 10%. So it's going to be an exciting year for Kodiak shareholders. We'll be drilling a lot. We have results coming within weeks from last year's program, and then we'll start drilling also very soon. We are mobilizing as we speak, and the drill will turn soon again. Lots of news all through the year, and the potential for more discovery to be unlocked for our shareholders. Thank you.
Everyone, and thank you for joining me to get an update on Superior Gold, and thank you for hosting us today. As a reminder, please refer to slide 2 on our presentation, which is posted on our website, to view our cautionary language regarding forward-looking statements. Also note that dollar amounts in this presentation are in US dollars unless otherwise indicated. So let's move on and talk a little bit about our world-class gold mine. So Superior Gold is a TSXV listed gold producer which owns 100% of the Plutonic gold operations located towards the northeast of WA. The Plutonic gold operations include the underground gold mine, the Hermes open pit projects, and then also an 80% interest in the Bryant Basin joint venture, and now the Plutonic main pit pushback, which I will talk about a little bit later. We hold a large prospective land package along the Plutonic Miramar Gold Belt with several other gold deposits in close proximity to our existing infrastructure. Moving on to the investment highlights. We believe that the key investment highlights of Superior Gold are the following. Firstly, Plutonic is situated in one of the top mining jurisdictions in the world according to the Fraser Institute. It's a world-class operating mine and was established with infrastructure that also includes significant latent milling capacity. The business has a clear and concise optimization and expansion plan and is endowed with significant mineral resource base with demonstrated exploration upside. Finally, one of the most compelling attributes is the re-rate opportunity we represent compared to our peers. In order to achieve a re-rate, our growth strategy target delivering 3 goals. And I'd like to expand on that a little bit. Firstly, deliver a safe, stable, and predictable operation between 70 and 85,000 ounces. That's our first goal. The second goal, an operation of scale with reduced all-in sustaining costs by increasing production to firstly circa 100,000 ounces per annum with a current 1.8 million tons per annum mill, and then taking it to the next step of moving up to 150,000 ounces by restarting the current shutdown 1.2 million tons per annum milling circuit. This is expected to be achieved by increasing ore production, not only from Superior Gold's underground and open pit mines, but also from external sources. Lastly, it's important for us to invest continuously, but also invest smartly in the exploration of known high potential targets to expand our resource and reserve as well as our life of mine. I will explain a little bit more detail on how we can achieve that goals in a moment. Insofar as where we're situated, we hold a 644 square kilometers of prospective land along the Plutonic Miramar Gold Belt. This is also important in the sense that there's several other gold deposits in close proximity to our infrastructure, and that is an important strategic advantage for our expansion, especially the fact that we have latent milling capacity. Now, expanding a little bit on the growth strategy. Our growth strategy at Superior Gold, as I said, is straightforward and well-defined and is targeting to deliver 3 goals. The first goal is targeted to put in place a strong base for further growth, therefore delivering safe, stable, and predictable operations. Now, in this phase, which is now, we believe, complete, we started working to re-establish the steady state production from the underground mine, and we're encouraged to see the return to a state of improving positive cash flow in 2021. In addition, the near mine resource extension drilling, mineral exploration that started last year, as predicted, provided future mining fronts for stable, cost-effective feed to the mill. Moving on to the second goal. The second goal is targeted to deliver an operational scale which produces in excess of 150,000 ounces per annum at reduced cost, improves cash flow, while strengthening the balance sheet. Now, Goal 2 is planned to be achieved in 2 phases. The first phase is set to see the production increasing towards 100,000 ounces by supplementing underground feed with open pit production from a number of near mill past producing open pits. These include Plutonic East, which we commenced on schedule in 2021 in the second quarter of 2021, moving on to Perch, which we started in the fourth quarter of 2021, as well as now Main Pit Deeps, which we will start in the second quarter of 2022. In addition, we have an optionality into Hermes and Hermes South in the short term as well. The next phase is planned to increase the production towards 100,000 ounces per annum. Here we plan to recommission our second mill that is currently in care and maintenance, as I explained earlier. New sources of feed may come from exploration from our existing properties, but also from several other sources along the Plutonic-Marymia Gold Belt. The third goal consists of delivering on the exploration of known high potential targeted areas. There is a potential for a new discovery as we invest in exploration at Plutonic. We've certainly been very encouraged by our recent drilling results, which includes a third drill rig in the property dedicated to opening new mining fronts, and one may expect regular updates, as we've done on a quarterly basis, on exploration, as well as actively moving forward with the surface drilling strategy. It's important to share how we are tracking to deliver this strategy now. Well, firstly, Superior Gold has delivered the first goal. In 2021, the gold production exceeded upper level guidance at 77,000 ounces without any loss of productivity due to COVID. In fact, we've had no COVID cases whatsoever since the pandemic has started on our property. The underground production increased over the year in Q4 underground mining rate of circa 900,000 tons per annum was achieved. We now move on to Goal 2 in 2022. The first phase will target to increase the quality of the open pit ore, as I said, by executing on the early entry option at the main pit. Main Pit Deeps, once purchase complete in the second quarter of 2022. This will see open pit grade increase towards 2.5 grams per ton, which is significant given that our open pit feed is currently at about 0.6 to 0.7 grams per ton. It's also important to note that the open pit feed constitutes about 45 to 50% of our total feed to the current mill. The underground mine will expand its operations into new areas, up to 30% into new areas compared to 100% remnant mining in 2021. The underground is scheduled to deliver 900,000 tons in 2022, and that's up from 835,000 tons in the previous year. We also plan to run at an exit rate on the fourth quarter of FY22 of 1 million tons per annum from the underground mine. Gold production is guided between 80 and 90,000 ounces for FY22, with an exit rate of 100,000 ounces in the second half of 2022. The operational plan for FY22 is therefore designed to edge towards delivering the first phase in delivering operations of scale. We expect also to announce the updated resource and reserve, as well as the life of mine, towards the end of Q1, early Q2 in FY22, which will form the basis on which the next phases are expected to be delivered. Moving on to our guidance. Our production guidance for 2022 is set at a production, as I said, between 80 and 90,000 ounces. As the business is generating cash, we are reinvesting in capital and infrastructure. One thing worth noting is that our exploration spend has more than doubled year on year. In 2020, we did almost no exploration. In 2021, we spent about $3.7 million, and now edging towards between $7 and $10 million on exploration, which will put us up on the upper level of the framework within which companies like us typically invest in exploration. That will take us up to between $90 and $100 per ounce produced spent on exploration. Moving on to the next slide, and specifically talking about how we've improved production, I think it's worthwhile to look back and reflect on what we've achieved over the last few quarters, and that will give the investor also some confidence as to the measured and methodical way that we're going along in increasing our production, improving our financial position. Firstly, in the second quarter of 2020, we achieved about 60,000 ounces annualized production. That's increased to 83,000 ounces annualized production in Q4. Commensurate to that, with our costs coming down as well as our net cash improving, our net cash position improved from just over $8 million to now almost $24 million at the end of 2021. A very important project for us going forward is the main pit pushback. Now, I spoke a little bit earlier about the early entry or main pit deeps. Now, main pit deeps is a small portion, early entry, pulling forward cash flow from the main pit pushback to feed our mills in 2022. The PEA is now progressing towards completing the pre-feasibility study. We're looking at from a PEA perspective, about $82 million worth of investment, but that will provide 60,000 ounces over 6 years per annum for the operations. Now, it's very important to note here that the PEA or the main pit pushback ore is designated to be fed into the current mill that is operating. It's also worthwhile noting that this ore will come in at a very low all-in sustaining cost, and therefore contribute to our strategy to reduce our cost and increase our margin. Talking about our latent capacity in our mills, it's worthwhile just showing what the plant would be able to do at different grades and different volumes. So at 98,000 ounces, we need 2 grams a ton in the first mill. If we were able to start the second mill, we'll edge up to 153,000 ounces. So that's a very conservative view with attainable recoveries assumed in that space. At higher grades, you can see the significant ratchet effect that will have in running even a single mill, but also then potentially starting the second mill. Insofar as resources and reserves are concerned, you can see there over the time that Superior Gold has had the mine, through the drilling program, we were able to increase our resource quite significantly. Reserve, to a large extent, has stayed flat over the last 3 years. In 2020, we did not announce a new resource and reserve statement. As I said, we will do that at the end of this quarter. And the main reason for that is the revision of the block model for the underground mine that we've now taken into consideration. We look forward to announcing these results in the next few weeks. I think a few upcoming catalysts, just to summarize, we have a number of them coming forward. Firstly, going forward, we expect to provide more regular underground exploration updates. We've done so on a quarterly basis. In fact, in Q4 last year, we had 2 updates announcing Indian access as a potential new area with easy access near the portal of the mine. We will continue updating the market insofar as our exploration is concerned, especially given that we will now not only do significant exploration underground, we're now moving to surface exploration as well. We expect more opportunities for improvement as we continue the full potential assessment to unlock the latent capacity in the operations. Over here, there's a specific focus insofar as open pit feed is concerned. As you can imagine, with the mills and the latent capacity we have, the open pits is really one of the big levers we can pull to increase production from the site. We also expect to be commencing and announcing results of our heritage surveys, which is important on the main pit pushback project, to make clearer the timing of exactly when the main pit pushback will come into operation. The resource and reserve, as well as the life of mine already referred to, will be available at the end of this quarter. And over the next 12 months, we have a healthy pipeline of development and exploration catalysts to look forward to. Insofar as the capital structure is concerned, you can see there our capital structure is really tight at almost 123 million shares outstanding. Our balance sheet is very clean. We don't have any debt. The warrants or the purchase warrants that were in effect has run out this month and is out of the money, and therefore we see a further tightening of our capital structure. Insofar as analyst coverage are concerned, very significant coverage that we're getting there, and we're very happy with the coverage we're getting for the business. I think the important thing there is the average target price from these analysts at $1.21, and we were currently standing at about 87 cents. Still a lot of fuel in the tank to be able to increase towards that expectation insofar as valuation is concerned. You can see also there a number of our key shareholders that we have on our register. I think in closing, I'd like to just quickly talk a little bit further about our growth strategy. Clearly, we've delivered on goal 1. We're moving into goal 2. Really looking forward to delivering our 80 to 90,000 ounces this year, and more importantly, the run rate towards the end of the year, both from underground as well as total gold production. It's also worth reminding the audience that our spend on exploration will more than double this year compared to last year. So that's a significant uptick, of which not only mineral exploration underground will continue as we open find and develop new mining fronts for the underground and for the longer life of the underground, but it also refers to the entry now into surface drilling, which we will do on our own property and towards the south, where we identified 3 main targets. Now that drilling is starting in April, May this year, and we look forward to update the market on those farms. I'd like to thank everyone for listening, and hope you have a good day. Thank you very much.
Hello everyone, welcome to my presentation on Sorama. I'm pleased to be able to give you a bit of an overview of the company today. Sorama is a gold focused company operating in West Africa. We've had quite a lot of exploration success in Burkina Faso, and we're looking to continue to build on that. So without further ado, I'll get straight into it. So firstly, the requisite forward-looking statements. Obviously this is a recording, so I'll let you go back and read that at your leisure. So getting into Sorama, really the investment highlights for Sorama. We've got a large land position in Burkina Faso in the Houndé belt. We've got close to 2,000 square kilometres there. So within that, we've got about 70 kilometres of strike of highly prospective ground. We're flanked on the west and the north by Endeavour, formerly Teranga to the north and Semifo to the west. So I think anyone that follows the market there will have seen a lot of consolidation in recent times, and also new mines continuing to get built. So our lead project in Burkina Faso is the Sanatura project. That is close to a 3 million ounce resource spread across 2 deposits. So the Contango Ore deposit, which is around 2.5 million ounces, and the Bondi deposit, which we acquired from Orezone Gold, just under 500,000 ounces. So between them, they make up the core of our exploration focus. And really the aim of the game for us now going forward is to really see how big this project can get. So with that, we've got abundant exploration targets on the Sanatura project, but also on our other projects at Kumandara, and also we have a joint venture with Endeavour at Karankasso, which is the blue permit area highlighted there. That's with Endeavour, so we're just kind of poking along on that with them as well. We've got a high impact exploration program planned. We're just scheduled to list on the ASX in the coming month. That'll basically put some money in the tin to allow us to get on with drilling. We've got 50,000 metres planned up so far on the Sanatura project, about 5,000 metres for the Kumandara scout drilling. It'll be shallow, highly accretive drilling, really focusing on oxides and near surface oxide ounces. And I guess the thing to look at is, the company has a very compelling valuation when compared to our peer group. And there is a significant consolidation opportunity within the area. We've obviously, had a few conversations with Endeavour, but we think the ultimate value play where we operate is to consolidate the Sanatura and the projects next door to us. So there's 4 million ounces within a 5 kilometre radius of the Contango Ore deposit. Obviously, most of those are Sorama's, but that's a dialogue we just have ongoing with Endeavour. They're commercial at the end of the day, so they'll do what's right when suits them. So moving on to the capital structure of the company. It's fairly clean and tidy, particularly for the amount of time the company's been around. We don't have a large warrant overhang. We've been quite focused on keeping the capital structure tidy. As far as the board goes, we've all got a fair few miles on the clock. We've all been operating in Africa for an extended period of time. So Simon Jackson, chairman, he was involved with Redback, and ultimately that transaction where they sold that Redback to Kinross. My background's mining operations, so it's probably an unusual skill set to be running an exploration and development company. But I've got 20 years experience working in emerging markets in Russia and Congo and West Africa. Adrian Bias, he's a geologist and rounds out that side of the board, and Steve Zaninovich was a director of Lycopodium. So anyone that's seen Orezone's presentation, I'm sure would have heard Patrick Downing talk about Lycopodium building their plant in Burkina Faso, but they've built most of the modern gold plants in West Africa. So Steve was a director there. He's been doing projects in West Africa since the mid-90s. So it's a small board, but we pretty much cover all bases. And on the shareholder side, it's a fairly lumpy register, but probably the key takeaway here is that management's still close to 10% of the company. I'm half of that amount, so we're heavily invested financially and professionally in this. It's like most juniors, it's been a journey, but we do see us making good progress in the next kind of 12 to 18 months. Just briefly touching on Burkina Faso, it's a very well-established jurisdiction. It's been a happy hunting ground for both ASX and TSX juniors and miners. So recent examples are obviously West African bringing the Sanbrado project online. That was built ahead of schedule and under budget. Lycopodium did that job actually. Obviously Endeavour are very active in country. They're having acquired Semifo and Teranga in the last kind of 18 months. And we have Orezone, who I believe are due to pour first gold Q3 this year. And IM Gold, who is probably the largest cash producing asset, sits in Burkina Faso. So the jurisdiction, like many, is not without its challenges. From a geopolitical point of view, we're happy to be in the southwest. But really, I think the thing with Burkina Faso, as with many of these countries in West Africa, you just kind of roll with what happens in country. We've seen Orezone, just continuing to head their project down well. They've got $190 million financing put in place last year. So I think even with all the machinations going on in that part of the world, they managed to finance that project and well into the build on that. So well done, those guys. The Southern Hund area where we operate, it's a very well endowed part of the belt. The endowment currently exceeds over 19 million ounces. It's highly prospective. There's continual discoveries along there. As mentioned, we've close to 3 million ounces on our Sanatura project alone. And we're still seeing, new finds being made, whether it's brownfields or whether it's a continuation of greenfield success, what you see in companies like us. So looking a bit closer at our project, obviously Sanatura is our lead project. It's as mentioned, has two large deposits, a lot of drilling lined up on it. Kumandara is our project to the west in the Banfora belt. It's about 80 or 90 kilometres away from Sanatura. But it's a very prospective bit of ground. It sits geologically in a ground that's quite similar to what we see on the eastern part of the Hyundai belt where we operate. And then obviously the joint venture with Endeavour, which sits adjacent to our Sanatura project. So looking at the Sanatura project a bit more closely, as mentioned, there's two deposits on there. Bondi, obviously very good grades, super accretive for us. There's a significant high grade component to the resource as well. So if you apply 1 gram cutoff, you have about 2.3 million ounces at 2 grams. And then within that, you have 500,000 ounces at 2.5 grams in M&I and 1.8 million ounces at 1.9. So even though the resource grade, which is pit and mining shape constrained, is a bit lower than that, the grades that we mine, we anticipate will be more in the range that you see there. It's still very underexplored. We've got over 30 exploration targets across the Sanatura project. Some are extensional, some are greenfields. And really the key focus of the upcoming exploration programs to determine, how big the project can get. So we've got a good solid base to work from. We've got some easy hits to incorporate, I guess, what we call low-hanging ounces. So within the current resource is probably 200,000 or 300,000 ounces that are unclassified due to lack of drill density. So we'll be looking to convert them. And then otherwise we'll be focusing on shallow oxide material. So we've got 1 million ounces now of oxide in transition. So we want to push the pure oxide component well through 1 million ounces in the next program. And that will represent a good starter position for the project. So talking about the Bondi deposit, we haven't done a lot of work on this. We're waiting for a protracted period of time to have the permit, the underlying permit for the deposit granted. So that was granted late last year. After that was done, we remodeled it and incorporated it into the resource. Anyone that's been following the resource history, we saw a 20% resource increase in a resource update published late last year. Bondi, though, for us is super accretive. It's about 30 odd kilometres, 35 kilometres from Contango Ore, which will be the centre of a future operation. The run-of-mine feed on Bondi will be 2.5 to 3 grams. It's all free milling, high grades. And what you see here is some of the, I guess, historical exploration results from Ore Zone. So, some very high quality drill hits there that I think if we were putting out today would be exciting the market. You can't go past 52 metres at 5 grams or 70 at 3 grams. So we'll be targeting high grade depth extensions to here and also strike extensions. And there's a half dozen targets that sit outside this. So when you look at the Bondi deposit itself, you can see with the remodel, there's been some pretty great historical hits, but it's not drilled a lot, bar that central area. It's not drilled a lot past 70 to 100 metres. So the black lines you can see on there are drill traces. But what's of interest to us are, any potential for down plunge extensions with those high grade zones you see there. So the pink's kind of 2 to 5 grams in the block model. So there's some pretty good opportunities there, along strike, but I think importantly down depth as well. If you're looking at areas like this and like that and that, and to a lesser extent these areas, but we're kind of curious what has been happening in these areas around here. So we'll be kind of putting a fair bit of focus into that. And I guess getting back to quick hits, you can see in this image here, the darker blue is unclassified material. You can see the pits along here are data constrained. So we'll put drilling into this to actually improve the drill density and drag as much of that resource in as we can. Kind of getting onto the Sanatura project itself, it's a big system. We've drilled it for over 16 kilometres of strike. 70% of the ounces sit within 150 metres of surface. The bulk of the strike's only tested to 70 metres. We've just been focusing on oxides. And the resource itself, though, contains over 2 million ounces at 2 grams. We get, with the flow sheets we're looking at, we get 95% recovery in oxides and 91% in fresh. I think importantly with this project, for various reasons, some from a structural point of view and some from kind of recent events globally, there's been no major drill programs done on this since March 2017. So we've been fairly starved of news flows. That's obviously something we're looking to address post the ASX listing. So really the exploration upside here is going to come from, looking at strike extensions, flat structures we've identified in the last round of drilling, and then a lot of targets in cross-linking structures, which likewise you'll see in these areas here. And most of the ounces to date are kind of in this area and in this area here. So we'll target these cross-linking areas there. This just gives you a quick idea of some of the historical drilling for people that aren't familiar with it, because it was drilled quite a while ago. But in those main zones, MM and MC, we have some particularly high-grade areas. They've been drill tested to over 500 metres. But, some of the better hits are 31 at 7, 36 at 6.5, 10 at half an ounce. So We've got 18,000 metres lined up in this area to convert a lot of this ground. As far as the regional exploration side goes, there's a few regional targets that are walk-ups as well. So Zanawa, which is about 4 kilometres from Bondi. We've done one round of scout drilling on that, and best hit was 22 at 3.85 from 5 metres in oxides. So Zanawa sits right out there. We've got that traced over about 800 metres of strike. Bamako also is a high-grade gold quartz vein system. Very high-grade hits. Probably the challenge on that is the continuity. But when we do hit, we're kind of 15 at 6, 8 at 18. So they're pretty respectable. And Botoro is not as far up the curve as the other ones. Kumandara, just kind of quickly touching to the west. It's a very early stage project, but it's got some very nice looking anomalies on it. So the biggest anomaly on this kind of 35 to 40 kilometres long and 3 to 5 kilometres wide. Some of the scout drilling we've done down there has returned, pretty good hits, kind of around 10 grams a tonne type hits. Likewise with auger drilling and soil sampling as well. We see it, geologically quite similar to what we see in the Hyundai belt, but really the project sits along a major regional break. We've got high tenor gold in soils, major structural features, intrusions, and a lot of artisanal working. So really from an exploration point of view, it ticks a lot of the boxes. As far as looking forward to milestones and news flow, obviously we get the ASX listing behind us in the next month or so. So Euroz Hartleys is leading that listing. Euroz is a leading Australian resource broker. They were behind West African Predictive, which has taken off in recent times. I think they have a 350 million market cap with a new discovery in Guinea. They were behind Cardinal, a bunch of names in West Africa. So really when you look at broker selection, we think we've picked the right guys to work with there. So after the listing, we've got a lot of drilling to do, which will then lead into a resource update, further follow-up drilling, and ultimately into a framing study for the project. So really to finish off, if you're looking at the investment case for Surama, strategically positioned in the heart of, 2 prolific gold producing belts in West Africa. The large belts, they run from Burkina into Ivory Coast. We've already got a very solid resource base to work with. So really now the question for us is how big this can get. We've got a lot of exploration targets, I think, across the whole project areas. We've got over 50 targets to drill. We've got a very compelling valuation, so we consider there's a lot more upside risk than downside risk. And the exploration program will commence immediately post the ASX listing. So that really sums up Surama. We think it's an opportunity for anyone that wants to play the junior gold space. We think the risk of exploration and where we worked well and truly discounted in the share price. And we think, it's an opportunity for anyone that wants to